Okay, so yeah, I am familiar with his portfolio, right? Oh, let me check one more thing. But you know, whenever I looked at it before, I just never understood why he's so positioned into VWO and EEM. These are all emerging market ETFs, and he has substantial size on this. He has about 70 million shares. If you go down, you take a look, order it by shares right here. I like to do it by shares. We could also do value, but you're going to see that he's in VWO, Vanguard, FTSE, emerging markets, 73 million shares. I never understood that before, right? And the only other guy I know who has a large emerging markets position is Stanley Druckenmiller, which is my favorite investor. So after watching that 30-minute clip, it gave me a lot more insight, so I recommend it. We're going to go over it today. We'll take it slow. We'll let people come in. Hey, welcome, guys. Welcome back. You're Love Deep Strand, right?
Yeah.
Yeah, I remember because you were like pretty excited in the back last time.
I butter buddy too.
Okay, sure. Hey, welcome, man. Welcome. We're just getting started. I need to get cleaned up over here. I came in kind of late myself, but if you guys have any questions, like before we get started, feel free to ask.
Okay, last week the whole.
I gotta answer your Walmart as well.
That's not less important. The whole subject of the inversion topic came up again.
The
Right?
yield curve inversion?
Right. So
Yeah.
then on Tuesday, the world's coming to an end because the inversion is showing X, Y, Z. But then suddenly on Wednesday, 3 countries adjust to their debt or whatever structure, and then suddenly, Wednesday, it's all back to normal.
Yeah.
So how much of a real impact of this inversion topic is there on the overall market? It seems like it's up 300, then down 300 in 15 minutes.
Yeah,
and then
it's-
back up, and so we're going to see these swings.
You're talking about two different things. You're talking about the upswings or the volatility in the markets, and then you're talking about the yield curve, the bond curve inversion, right?
Well, they're related, right? So
They
it
are,
says
yeah.
that, the yield curve is repeating what happened with every recession in history or whatever, and then suddenly 2 days later, it's now everything's blue sky, it's all cleared up.
Welcome,
Yes.
everybody. This is Axel Merck.
Whoa. Yeah, so if you recall, I like to pull up Axel stuff, and I think he did a recent, business cycle. So yield curve is extremely important, right? It's, it predicted like several of the last recessions. I don't have the stats on me. It's also in the Gold We Trust report. I think I do have a stat right here. I wanted to pull up Axel Merck's slide as well, because we went over it, I think, last week or 2 weeks ago. So we know the yield curve has been inverted for some time now. Typically after inversion, it takes maybe several months before a recession. So an inverted yield curve has predicted the past 7 recessions.
No, the point I'm making though is that Tuesday it's top of mind, this problem is real. Then on Thursday it's suddenly, no, everything's fine. 3 countries adjusted their debt or whatever their level, and suddenly it's back to normal. In basically 48 hours, the problem from catastrophe around the corner to it's business as usual.
Yeah. If you ask me today, I think with the way the markets are set up, it's kind of it pulled back this week or last week, and then we're sort of in a bounce right now. I think it's setting up for more volatility to come.
Absolutely.
So some of the key volatility issues would be what? Brexit, hard Brexit, they say. China, dollar yuan. So I need to better understand that, but it's hitting like record levels. Our markets are kind of overstretched. I think several reasons are setting it up, and so I'm saying September, October is when we're going to expect more volatility. Right now it's kind of like a little bit of a taste. So I've been trying to play TVIX, but that's pretty much it. TVIX is volatility for those who don't know. Yeah.
What was funny is Thursday all the news was saying record high, great week, great year, everything's fabulous, and Friday, everything crashed.
Yeah, so this is what the markets look like today. But real quick, I do want to answer your question. So the yield curve, I guess we could dive in later. We did dive in it several weeks already. We could circle back later, but I want to do a quick analysis on Walmart for you. So Walmart, in my opinion, is a pretty big corporation. Big corporations tend to kind of grow pretty hard, right? So if you look at something like Carbon Black, which we've been looking at, it's a lot smaller at 1 billion in market cap. I think this one's like 300 billion in market cap. So it's a lot harder to grow. But judging from the charts right now, it looks like they may have hit some sort of growth story. So it does look pretty good. I would continue to see it say, let's say there's growth if it's above 105. But right now, if you look at the charts, what do I see? Going over here, I see that it's still respecting the 100-day moving average. So I just like to keep it simple. So 100-day moving average and the 105 price area. Simple as that. And then it's currently in a midterm downtrend line. What was your take, or what was your ask?
They announced their results on Thursday, so if you compare them to Target and to Amazon, mass retailers, it's likely they'll come either close or within X percent of their guidance, right? So it's
Right.
somewhere in that, how much did they meet or exceed the target, right? If they miss it, the stock goes down 5%. If they satisfy it, it goes up 1%, and if they blow the numbers out, it goes up 5%. So it's somewhere in the middle of that. Do you either lose 5% or gain 5%?
So you're really looking to play earnings. Is that what you're saying?
Earnings are key though. Earnings
Earnings
are
are
really
key.
I mean, right now, if you look at their earnings, they're on a decline. But looking at what Target did, what Amazon did, which
Yeah.
were respectable,
Yeah, yeah.
does that suggest that Walmart will continue to grow back to where it was before? Hard to say.
Yeah, hard to say. Remember last week I said that I personally like to look at prices. I'm always looking at prices because prices tells me whatever anyone out there knows anything, they will price it in by making a transaction. So from anyone from like an average person to like a money manager, whatever they know, they'll kind of price it into the price or the charts. And so I study the charts.
So can you compare it to, say, right now we're having a kind of a downturn, right? So compare Walmart to
You're talking about Walmart or just like the markets, the broader markets
the
in
broader
general?
markets are basically a little bit down, right?
Just a little bit. It's nothing too fearful yet.
But if you compare Walmart to periods in time when the markets were not all that good, and see how much it dipped and how much it went up,
Yeah.
maybe
yeah.
that gives you a...
Yeah. So I mean, I guess, I know there's new people in here, but it helps to kind of develop like a view on like the world, right? Today we're gonna really just keep developing the view and refine the view by analyzing what Ray Dalio has to say about the rise and fall of like reserve currencies and empires. We're gonna look at technological advancements, so industrial 1.0 to now 3.0, 4.0, right? And have you guys heard of the word industrial 4.0? So like IoT, AI, and all that. So we're going to take a look at that. It's just a few charts I'm going to pull up, and then kind of look at stocks around that. Oh, and then also talk about venture capital, because I met a venture capitalist this week. So thanks to Bonnie over here. She was the one who was an alumni from a university, and they hosted an event, and we attended. So we'll get started and talk about it. So did you still want to talk about markets, or do you want to just get started and we'll dive into the markets as we go?
Go ahead.
Yeah. Did I answer all your
Yeah,
questions
absolutely.
before? Okay. Okay, guys. So let's see. Where is it? I am a little sluggish. I had like a crazy 3-day weekend. Well, not 3-day weekend, but yeah. So Friday we had our mixer number 16. It's still full. It's still pretty packed. This is a picture right here. So thank you guys in here who came out. Any questions about why I do this or what's it for?
Yeah, what is it for?
Yeah, so basically, in our observation of Silicon Valley, it's just prime with like strong human capital. The network here is really, I'd say, more of a multiplier network than any other place in the U.S., right? So meeting people in here, a lot of engineers from every Fortune 500 company almost. They come in and you just get their insights. So building up a network later to get into venture capital, hopefully. A lot of people don't see it, but I view it as me kind of building out the infrastructure I would need to be a VC. And today and yesterday, meeting an actual VC kind of further reinforced the reason to throw these mixers, right? So let's say if I invested into like a startup, an entrepreneur with like that double sparkle in his or her eyes, like, oh yeah, I like your idea, I'll buy some of your equity. But now it's like, now I funded that entrepreneur. Well, the infrastructure or the resources we're gonna need is someone to hire people to work, strong engineers, strong salespeople, and so forth. So it's kind of like you just meet people and see what their skill sets are, and then whoever you could partner up will whip down the road.
Okay.
From a hedge fund point of view, let's say if I wanted to raise funds for an investment project, it helps to have a network. So again, it goes back to the 3 ways of making money, right? Going to work, start a business, or investing. So I always say that if you want to excel at work, really just hang around for as long as you can. If you want to excel at business, it's really heavily relying on a network. I would say that you don't really need this might sound provocative, but this is my opinion at this point. Like you don't really need intelligence. You just need a network, right? Because it's like if you know everyone, you could just get that deal flow, right? So I understand that, from a business perspective, it's always important to build a network. So I encourage everyone to kind of go out there and build a network, especially here in Silicon Valley, where again, like I said, the human capital is just so high and strong compared to other pockets. Silicon Valley is also a prime location to build a software startup, right? You wouldn't have that same resource if you were in, like, I don't know, Ohio, let's say. Maybe. But yeah, so that's why I run the mixer. So it's kind of like a two strategy thing. Yeah, this club is more like an investor audience, right? So a little bit of both. Did he need a chair? Is that Sachin? I can't see. Oh, it's not Sachin. Hey, welcome back. You work at LinkedIn, right? With your buddy? See, that's the cool part. We got someone from LinkedIn coming in. Lalit's from Applied Materials. Sachin's from AMD, came from Intel. Pretty cool stuff. So yeah, again, I encourage you guys to go out there and meet people. The highlight for me of this weekend was actually not the mixer, right? Because that was mixer number 16. This was actually the highlight right here. So again, thanks to Bonnie over here, sitting in the second row. She's an alumni from Case Western Reserve University, and so was Ashim Chandna. I keep saying Chandra, but it's Chandna. So she messaged me on Friday saying, hey, this person's throwing an event at his house in Atherton, and do you know this guy? And I texted back, and I'm like, you kidding me? I stalked this guy for like the last several years. Right? Well, I mean, that was my thinking. I didn't say that to her, but I took a snapshot. She said, hey, Kay, do you know this person? He's hosting our alumni event at his place in Atherton this Saturday. I said, yes, this guy is one of the most respected VC I know. I believe he is one of the masterminds behind Greylock, because a lot of the successful SaaS enterprise software picks actually originate from Greylock. So companies like Palo Alto Networks, Workday, Sumo Logic's not public yet, Arista Networks. This is Pure Storage. This is all coming from Greylock, right? They seem to have that high quality enterprise software entrepreneur deal flow. So it was truly an honor and a milestone and achievement to meet this gentleman, because meeting someone in person is just so different from just hearing about them on the news, right? It's just so different, and even watching them on YouTube. So it was really amazing. So I say he has a golden touch. So this gentleman, we're gonna do a little analysis on him. We'll look at Greylock today as well. It's something I added because it's an eventful week, I guess. But yeah, he's let's see, where do I start? You guys could ask me questions too about what I learned from actually meeting him, and I guess you could ask Bonnie too. Yeah, I don't know where to start, but he is on Forbes' list of the Midas list of top tech investors in 2019. If you ask me from my private banking experience of his net worth, his home, I looked it up before I went, is worth about 9.9 million. He bought it for about 4.9 million. And based off his track record, he's not holding multiple properties. He's really just holding one. Typically, VCs don't really hold. This is me observing all the balance sheets from Silicon Valley Bank when I used to work there. VCs only hold a few properties. They're not really big time real estate investors or aggressive. They mainly hold a lot of venture positions. So judging that this guy is 16 years at Greylock, his portfolio, his net worth, I'd say probably 100 million easily, right? I would say that with confidence. And I think I'd probably be 100 million, probably be downplaying it, because he could be, I think 1 to 300 is my thinking, based off of what I know, his investment positions. I've come across, I think I looked at Palo Alto Networks, or one of the companies out there, of the direct holders, and I found his name again. So he's a significant holder in some of the companies here in Silicon Valley. So again, why do I do these mixers? Well, hey, you never know who you can meet in Silicon Valley. So this was a great accomplishment for us. For me, especially, yeah, deeply for me. Yeah, let's dive into it, man. Let's analyze him in the next 10 minutes. Okay, so anyways, guys, quick market update. USA indices, global markets are coming off of a bounce. You could really kind of see it across the world. USA indices to international indices like European and German markets, right? I think in Europe, in the European area right now, it's really there's a lot of risk with the hard Brexit. At least I'm just reading that in the news. I'm not a super expert in global macro. I'm trying to be, but I anticipate higher volatility to come, and this is what I'm seeing. So the key thing I'm watching here is how far and strong this bounce will be. So we look at the S&P 500, it looks like this. So throughout the week of this trading week, I think gold spiked up a little bit. At this point, I don't really remember, but this is what I'm seeing. So we dipped down right here, and then this week was kind of like just a bounce midweek, if I recall. And this is where we're at. So we're still above the 50-day moving average, and that's how I like to keep it, simple. I don't apply anything too aggressive. Just it's right below the 50-day moving average, and so there's still risk of further downside. So I probably still try to be more protective moving into next week. I did shave off some of my gold miner positions, but then I added more into my silver positions. So that's what I'm playing. But I'm looking to get back into gold, right? So I have a gold investment portfolio where I'm just holding the gold miners. I'm not even selling them. And then the other one, I'm trading around it. So for the trading part, I'm shaving it off a bit. Just because I think it's a little overbought. And just, you want to kind of trade a little for fun, right? So that's what I'm seeing. Any questions on the S&P 500?
Quick question. Everybody deals with a different time frame, I imagine. I found something last week that amazed me. It was going to the 60-minute and like a 5-day, and it showed me where it was time to get out of Apple or get out of something, and it showed me where to get back in based on you guys know me from the 20 and the 50. But at some point, look up 60 moving average, 60 minute, and when you do a 5-day, you'll see it's crystal clear when you get out.
Okay, so what John over here is kind of talking about is more of like a day trading. This is more just we're kind of going top down, like bigger picture, and then zooming into.
Well, but this is exactly what you said though, because you were talking about you got out of gold and more into silver.
Yeah.
And if you can, and I found it by accident because I do 1 and 5-minute charts basically, but I have a 60, and I was like, wow, you could see where Apple was at, I think 204, and I brought charts to later show my my group. But it showed it clear as a bell when to get out of anything. And I brought up like 9 stocks to see it. But that shows exactly what you were talking about, and I'll shut up.
Hey, don't worry about it. No worries,
No,
John.
but, yeah.
You're helping me today. All right, I'm trying to get the energy going. So S&P 500, if you want to look at it in a more detailed way, I just slapped on a Fibonacci retracement. I did see that we retraced back to the 61.8. So nothing fancy here. I'm just trying to see where this thing has probability of going next. So it's a simple swing high to swing low, and I'm just measuring the retracement right here. So if we find resistance right here at the 61.8, then I'm anticipating maybe further downside. I do have a little bit of a bearish bias, sort of, kind of, but that's what I'm seeing next. Maybe we might get a double test of the 200-day moving average, but who knows? And this sell-off right here, I mean, that day when I just saw it kind of drop off the cliff, I don't know, I just felt like, okay, this is bigger money that's kind of exiting. So this might just be the initial part, maybe. Anyone have thoughts on this one? We're just looking at it from a bigger picture.
Could be a test.
Could be a test?
Yeah.
Yeah. Now, maybe a reassessment here. Do you guys feel the markets in the long run will keep going up? Let's say 6 months to a year from now, it's going to keep going up. You think it's going to go sideways or down?
There is something called bumpy ride.
Say again?
Bumpy ride.
You-
I heard like there will be a 10% tariffs on China. ECB meeting likely cut QA.
Yeah, if you zoom out, it's getting pretty heavy. It's been pretty. I mean, it hasn't been exciting. It is exciting from a trading perspective, but momentum trading perspective, it hasn't been as exciting. I like to zoom out occasionally and just kind of see where we're at, what's going on. This is the S&P 500 monthly, right here. So these were the previous declines, right? This is what I'm seeing today. It's been a very bumpy ride. I can't tell anymore at this point. All the manipulation, right? Lower interest rates is good for stocks. So from that dynamic, from a central bank perspective, it should go up. But from a nervous hand perspective of money manager, it looks like it wants to go down. I don't know, but I think gold is still a great position because we're devaluing the dollar. That's probably the,
Right,
Yeah,
I think
probably.
you're correct. I think because I think it will I think now it totally depends on the Fed.
mhm,
I think now market is anticipating that they may come out even before September meeting
yeah,
and may surprise market with a cut.
yeah, yeah,
So that could actually elevate the market again.
right, right, right,
And I think as you know, Trump on Friday said he wants to see 1% cut.
yeah, yeah,
So I think Fed is under pressure, and I think
Yeah.
if you see all other economies, for example, New Zealand,
yeah,
they did a higher cut than anticipated.
Right.
Ireland did another cut,
right,
and India did another cut. I think India was very surprised.
Yeah,
It's a
yeah.
growing company,
Yeah.
economy, right?
So it sounds like the whole world's trying to hold the markets up, the global markets up.
And I think the biggest thing right now is I think now 3 countries in Europe are in recession: Italy,
Yep, yep,
England, and Germany.
yep, yep,
So that is I think putting a lot of pressure
yeah,
globally, and I think that's why I think so many people are bullish on emerging economies.
yeah, yeah,
Because now I think there is a risk of dollar going down as well.
yeah, yeah. So that's really good for emerging markets, right?
That
And
is
then
very
that's
good for
also
emerging
where we kind of confirm that the working population is in that region of the world,
Yes.
right? So India and China are going to be very exciting. If you want exposure to India, there's also the ETF INDA. I just don't know when is the perfect time because there is that initial fear where I believe that if people start selling off, the dollar will rally because everyone's going to jump to the dollar, and that might drag emerging markets a little bit lower. So I like emerging markets, but I think we need to time it a little
I
bit.
think we have to time it perfectly.
Yeah,
I think
that-
we actually, I think the biggest thing is irrespective of how much
Yeah.
it rise,
Yeah,
I think
yeah.
it will only go up to a certain point.
Yeah, yeah.
And I
So,
think
so
that's-
I'm getting a little excited now because I think the big money to be made in the next decline is emerging markets.
Yes, and
Right.
emerging markets and certainly gold.
Yeah.
Gold, I think anticipating, I think it can certainly go up to 1800.
Yeah. So this is okay. If you ask me, what's my recession play if we were to have a downturn? During the downturn, I'd be looking at gold, right? And then when I start finding a bottom, then I start looking at emerging markets.
And silver is the one that has higher potential because silver is right now at 16 or
Yeah.
17.
Yeah.
It can go up to 49.50.
Yeah.
So I think that has the biggest potential.
Yeah. So let's just remember these three. These are the three that I'm holding in my head as a recession play. First is going to be gold,
Yes,
and then when the markets decline, I'll be looking at emerging markets and commodities.
absolutely.
That's hopefully where I'll become a millionaire.
I think that's absolutely right.
Yeah.
I do not think it's
Tho-
the right time to put
those-
money in equities. I think it's the right
Yeah.
time to put the money in commodities.
Right now in the stock market, not gold, commodities, or metals or emerging markets. For stocks, you want to be underweight, less out of momentum growth stocks because the premium could get wiped out in these market declines that we're seeing right now, sort of, kind of. You want to be into value and dividend stocks. That's probably the protected play.
Boy, you're reading my portfolio 100%.
Is that what you're doing?
Well, that's why I actually on Monday,
But I think that's the safest play right now.
on
Yeah.
Monday I sold my entire portfolio,
Wow.
100%.
Wow,
I bought.
Wow, this is the first. You've always been the bullish person in here.
I put 30% of it into gold, actually gold direct.
Okay.
30% into 2 other high-paying dividend equities.
Yep.
So I shifted the whole thing, and now I've got about a third of my position right in pure cash. And I'm thinking of either holding for 2 or 3 days or buying other dividend-paying strong company equities.
Yeah.
So it's a question of timing.
So I have to ask you now, like, you finally became a bear.
No,
I'd
but
say.
it's all about it's a little bit of luck, right?
It's a little bit
This
luck,
whole thing
okay.
about I'm under the impression that this whole China situation is going to drag on for quite a while.
Yeah.
I think that's going
Till election.
well for at least a month, let's say. So I think that's going to continue to be a thorn in the whole marketplace. Gold, I view as one that people view as sort of a safety net. So I'm not going to put everything into it.
Yeah.
But I still have got a sizable amount that I'm looking back to get into equities when the day is right, whether it's 3 days from now or 4 or 5. It's not like you've lost. It's all about timing, right? Even if the market goes down 2%,
Yeah,
that's
yeah.
a 2% gain that you do when you buy it back if it goes back up. So it's all about luck and timing.
Yeah.
So we'll see. But
No, I agree with you 100%.
Can I ask what the other 2 stocks were you got into?
I don't want to say which ones.
I can
One of them was AT&T.
Okay.
So
That's T, right? On
T, absolutely,
T,
yeah.
Yeah. I trade that also.
So it's a matter of a little bit of luck, right? I mean, no one, like you're saying, no one knows what the market's going to do this week. It's impossible to tell. There's too many factors. It's likely that the market's going to either go up or down 200 or 300 points for the next full week.
Yeah.
But you can never know. But if
Yeah.
you look at that graph, though, it still shows if you buy, fundamentally strong companies overall, it'll balance out over time.
Yeah.
So that it's just a question, if you gambled right, you got an extra 5%. If you gambled wrong, you lost 5%. So it's, you know, it's not like you're gonna be wiped out, but you're just gonna probably be in a similar or better position than you were in a year from now.
So yeah, I've been thinking pretty critically about this, like how I could, you know, help you guys in terms of like where I see opportunity for myself as well. I've never seen this type of volatility before, right? I've never participated in 2008. At the time, I was too young to know, to even be in the markets, right? So the only serious volatility I've seen besides now was 2015, right? When I'm like seriously actively watching, meaning like I'm putting in hours and hours in the day just watching. I always watch. I like to watch markets now. But this is by far the worst volatility I've seen because, again, like I said, this is the last one. And then this is one today. So I honestly believe that this environment is really holding me back from being what I typically am. I'm typically a software momentum investor, right? Where I buy securities, where I would stack options, like, you know, different strike prices on options on a security like Workday and Microsoft, and just kind of hold it and then cycle them through as time goes by, right? Like I'll buy like the 6 months and maybe even 3 months and just stack them and then take them away. But in this environment, it's not like a easy, you know, chill environment where you could buy, hold, and kind of sit back and then kind of capitalize. Gold right now seems to be that way. Gold where I could hold like maybe a few weeks, sell a little bit, take some, and then reposition back in with some different strikes for options. But it's been tough for software. I think it's been tough for just the general market. So it's weird, right? I'm shifting away from software to now like basic materials, gold miners. But yeah, it's interesting to see that you decided to liquidate your portfolio. That's the first.
That was smart.
Well,
That was smart.
it's not a matter of smart. It's more a matter of rebalancing and a little bit of luck, right? I mean, I bought Nutanix. To be honest, I paid $25,000 on Nutanix. Then I lost $50,000 on Nutanix. And if I would have held on to it,
Yeah.
would have lost $75,000.
Yeah.
So I mean, that stock was roaring to the top, right? So you make a lot of money, you put more money into it, and you lose what you had. So now I'm down 25,000 on that stock rather than being up 25.
Right.
But if you held on to it, that stock is tanking,
Right.
and you would have lost 50. So you're lucky you took a loss, but would have been worse.
So let me show you a quick technical analysis on Nutanix where you don't want to be in Nutanix, right? So what I had right here is a large, probably news-driven or earnings gap down right here. Every time you see a large earnings, news-driven, high-volume gap down like this, you know that it has a tendency to want to go down next, right? So immediately you find the low right here and you draw the line across. And so this would be sell signal number one right here, this big gap down. And then it will retrace, about 50%. If I were to put a measurement on it, it'd be about 50% right here. Oh, I wanted to switch to blue. So this would be 50%, right? It retraced to 50% right there. And it acted as resistance right here.
Well, so I bought it in.
So the key area is to look for the next sell signal, right? It would be the low of the gap down on high volume right here. So this would be the sell signal number 2, right here, right? So let's say you short. And so what happened next? It gapped down further, and then it set a low around 25. So sell signal 3 for me would be 25. If it breaks 25, I'd probably go puts on it, right? So you have 1, 2, 3 chances to play puts, right? If you measure the retracement right here, 50%, you see that it's right there. It acted as resistance. This would have been maybe opportunity 1.5. So again, opportunity 1, opportunity 1.5, opportunity 2, and opportunity 3. And then today, if you ask me, it's pretty oversold. I probably would have a harder time to go short. So that's how I would have timed in and out.
Yeah.
I mean that's yeah. And huh? Was it what?
It can go to zero.
It could no. Well, this one's a HPE partner. HPE is a major enterprise. It's about 30. Let's see, HPE. So you guys know HPE, right? It's 18 billion. This is a serious company. I mean, they have some serious leadership. If this were to go close to zero, it'd get bought out, in my opinion. Now, I don't know the Nutanix product well. That's my weakness right there. I'm more of a numbers-driven sales, fundamental analyst, market instincts kind of guy. So when it comes to technology product, that's where I'm working on right now to kind of better define that, better understand it well so I could invest on both spectrums, right? Does anyone know the Nutanix product in here? Well, I know it's a hyper-converged database, so it is like and Kozla has a position in it. right? Kozla Ventures, another VC in the Valley. So I still like it, even though it's kind of pointing down. I don't like it right now. I'll like it later. But that's my quick take on Nutanix, how you want to protect yourself. I hope that quick technical
No,
analysis
absolutely.
helped.
I actually think though that when markets go down, companies that are viewed as overvalued, let's say, and
Yeah.
crazy high Ps,
Yeah.
and not really profitable at all,
Yeah.
are the ones, the people that own it, which are typically, low investors, 50,000 or 100,000 at the most in it, feel they gotta get out, and the stock doesn't take much to
Yeah.
take a stock down 5% in a day when you get a lot of people just doing sell all market orders and suddenly the whole stock just caves in.
Yeah.
Not a Microsoft or not a
Yeah.
Walmart, but a one that's just viewed as hyper overvalued.
Yeah, so Uber is an example of why I want you guys to allocate away from growth. Uber is categorized as a growth momentum stock. Maybe not momentum right now, but it's categorized as growth. Growth meaning like everyone's going to use it, right? But when the market as a whole, the S&P 500, NASDAQ, and Dow Jones and all that, when they're not stable, it's going to pull down something like this. So you see that they had earnings right here, gapped up. What usually would have happened would be a follow through, but what we haven't said is back down right here. So this is where prices are currently. So this tells me that this wants to go even lower today, which is kind of scary,
Right.
right? This is telling me that this is not a zombie company like Lyft, where Lyft doesn't have balance sheet value. This has some balance sheet value. It's trading about 4.27 times its balance sheet value, so it does have some value, but it's not making money. It's losing money like crazy.
Right.
So I think this could get even cheaper. But the technology is proven among us consumers, right? I think everyone in here hasn't used Lyft or Uber sometime. So if this keeps declining, it'd be like a nice trade as well as a nice buy for a long term. But right now, it's just I wouldn't want to touch this. It's over.
Why is Lyft going down also?
Why is Lyft going down also? It could be because this is like Lyft is even worse in terms of financials. They're losing money, but they have no balance sheet value. So this is even worse. But they are smaller at 18 billion, right?
Sort of guilt by association though. Once Lyft is viewed as being in the shadow of Uber and Uber has a massive loss,
Yeah.
then people think, well, then Lyft can't be too far behind with having more losses, so they're just tied to it.
So I had 57 strikes calls on this one. It was kind of peaking around 65 or something. And then I took somewhere there. I just didn't like it. I took somewhere over here, right? And now I just feel like it's looking pretty bad. So this is the recent market action for Lyft. So I would stay away from growth momentum stocks. Anything that is hyped up, like, hey, all your friends are talking about, I might want to stay away from those and stick to, value, gold miners, dividend stocks, something just more secure right now. Because markets are looking a little heavy, and I think there's a lot of catalysts or reasons for more volatility to come. So I am looking at volatility to play right now. So securities like TVIX and UVXY, those would probably be the pairs that I'm looking at. So here's TVIX, I'm looking to play. So this week, if you follow the chat, I was trying to make a day trade on this, though it didn't, I just took like whatever I could. It didn't go through, but I am looking for a spike in TVIX. If we get a spike, this thing could easily go up to $50. This is one of those instruments that you can only play when volatility is live, when volatility is there. It's a more sophisticated instrument that I don't recommend. Now, when the downturn happens, let's say, and I'm going into emerging markets because I'm extremely bullish on emerging markets, there's an awesome triple leverage pair out there. It's called yin and yang. It's kind of funny, but it's triple leverage China, right? So there's yin. So this is triple leverage China, right? This is the bear, if I recall. Yeah, bull shares right here, right? And then there's yang. So I'll play this in the next cycle. This is triple leverage, again, emerging markets China. So I'm bullish on China. So this is where I think a lot of money can be made in the next cycle. But it's, again, the bigger move is it needs to be timed because right now it's more of in a bear market. That's why you see these spikes. So for now, I'm just watching emerging markets. So I guess as time moves on in this investment club and the markets do start to turn down, let it finish out. Let it wipe out the players or whatever. If it does, right, then I'll start looking at emerging markets.
So is yin yang also the equivalent of the US VIX?
No. So yin yang is something the equivalent like a JNUG and a JDST, JDUS and JNUG. DUS and Nugget. Okay, so for gold leverage, there's DUS and Nugget. DUS is triple leverage bear. Nugget is triple leverage bull for gold, right? And then there's JDUS and JNUG, which is miners, junior miners, leverage. That's even crazier leverage, right? So gold miners junior, there's gold miners and then gold miners junior, which is even more leverage, and then you got the triple X on the juniors. And then if you short one and long the other, you get 6X free leverage, right? So there are ways to tap into leverage in the financial markets that a lot of people don't know how to do. Did that answer your question? It's just so I don't know if it will help you guys, but you gotta kind of understand the different products that exist out there in the stock market, right? There's stocks, which everyone knows, that are tied to companies, and then there are ETFs, and then within ETPs, exchange traded products. Within that, there's ETFs and ETNs. What we just talked about, the triple leverage, are called ETNs, exchange traded notes. So those are just derivative ETFs, maybe, if that makes sense. I made up that word, but they hold derivative contracts. So it's more of an aggressive play. But let's move on this. Looking at NASDAQ, guys, it's pretty much the same as the other ones. I like to look at all the indices just to make sure that everything's kind of in line. So NASDAQ, this is what I'm seeing, 50-day moving average acting as resistance. Nothing much else to comment. Again, this is a slight bounce, about 50% retracement. I'm looking at maybe more volatility in the coming weeks. NASDAQ technical, again, 61.8% retracement. I'm just showing you the same thing as I did with the S&P 500. Going down to Dow Jones, I'm just breezing through the market overview because we have a lot to discuss today. Dow Jones Industrial Average, again, resistance at the 50-day moving average. That's all I'm looking at. And we bounced at the 200-day moving average right here for Dow Jones. In terms of a Fibonacci retracement, not a full retracement to the 61.8, but again, that's what I'm seeing. For the Russell 2000, this is the most bearish one. Throughout the week, it was getting at pretty lows, and it looked like it wanted to go lower. But we're kind of back at the 200-day moving average, but slightly below. And again, this is the objective one-day close below the 200-day moving average. I know this part could get kind of boring, but this is what I do every week to kind of get a grip on the markets. You have to, I mean, at least in my opinion, I mean, from your style, you don't want to go for the exotic type of plays, right? But if you wanted to go for like global macro plays or more, how long should I hold my stocks, then I think this type of analysis is essential.
I tell you, this chart I found, I'm telling you, it's 100%. And T, by the way, looks really good.
T?
Well, no.
Oh, AT&T?
AT&T,
Yeah.
Yeah,
Oh,
yeah.
from a long side, how long? How long's the hold?
Well, I mean, you know, bring up any stock, but go to the 1 hour and go to, I don't know what I'm on here. Is it?
Let's do it at the end if that's
Yeah,
okay.
yeah.
Okay. So I'm just gonna go through this part here. So that's Russell 2000, guys, below the 200-day moving average. I feel a little fearful. And again, retracement, 50% on the retracement for the Russell 2000. Again, just a fancy tool that I'm using called the Fibonacci retracement. You guys could YouTube it online and learn what it means. Looking over at the bond markets, nothing much in the bond markets. I kind of had a quick analysis just to show you what's going on. It spiked up with lower news of lower interest rates, and it's just been kind of consolidating sideways. The longer it consolidates, it kind of de-risks from a decline, if you know what I mean. So if it consolidates for a long time, the next leg up would be right there. I'm anticipating higher bond prices because interest rates are expected to go lower. That's really the trade. And then this is the yield curve update. Again, it doesn't make sense to look at the yield curve every week, but here it is. Looking at volatility. So the volatility curve this week, it did go red, but now it's kind of yellow. So again, I'm getting mixed signals, right? How do you identify signals to trade in the markets? If you're day trading, it's a lot easier. A lot easier, right? But if you're like a money manager status, it's a lot more difficult. You gotta use several indicators, I'd say. I wouldn't say it's gambling. I mean, if it's gambling, look, let's say.
Well, no, they recharge too.
Well,
They recharge.
I mean, let's say you're a day trader, right? Every day you're pulling millions of dollars out of the markets, and then after
We're putting millions in too.
yeah, let's just say you're pulling. You just say you're just pulling, right? Now you built up like 50 million. Where are you gonna put the 50 million? Into like a real estate? You're gonna go out and buy real estate. Well, when you retire, how are you gonna position? You still have to position that 50 million in cash, right? Unless you leave it in the bank. But the bank lends it back out.
I would never leave $1 in the bank.
Yeah, so this type of management style is more for those who have probably have more than, let's say, well, I mean, anyone really. If you want to just preserve your money.
Yeah.
But trading's a different animal, I'd say. But yeah,
That's the biggest question. Now, once you gain wealth, and that number is up to you, whether it be 100,000 or $1 million or $5 million. Once you, speaking as an older person, and I've talked to many, I work for the wealthiest people in the world, and they're a lot more scared after they become wealthy than they were struggling to get wealthy. Because now, well, exactly, what do they do with it? They put it in, they lose 25,000, 50,000, you know, unless you get, well, I mean, you go to YouTube and look at how many billionaires went broke. I mean, how the hell do you be worth $1 billion and go broke? I mean, keep at least 500 million and get out of the game, you know?
Yeah. So for those of you who, this is also my own, something I didn't know for a very long time is, I used to think the top YouTubers made a lot of money, but they actually don't. Like, can you tell me who in the world do you think makes a lot of money?
That Swedish guy.
Oh, anyone. Just PewDiePie. Yeah, Warren Buffett's pretty up there, right? Now, I mean, you could do a simple observation. We did this once before, but let's say PewDiePie net worth, right? I always thought like they made a lot of money, but his net worth's about 20 million. That's not that much for, you know, someone that has like what, 20 million plus subscribers. Huh?
It's spectacular.
He's
20
also-
million?
Spectacular that someone can make that amount of money on a YouTube.
But hold on, it's a lot. I
How many
mean,
people in this room have a net worth of 20 to 30 million by putting content on YouTube? I mean, it's
okay.
it's
So
real now. That's
let's
doing better than probably everyone in this room.
let's be real, right? So let's say if anyone could check the subscribers, I'm just gonna say he has 20 million subscribers, right? More?
Most likely.
90 million.
So let's say 90 million subscribers, right? So 90 million people know him, and he's worth 20 million.
He was
Right.
competing with India's T-Series to be the top.
So The Rock's net worth is 280 million,
Oh, wow.
right? And now there's an interesting thing. Like, how many people know Robert F. Smith? Right? This is where I started to realize, like, this guy's 5 billion, right? But less and less people know him, right? So this guy, a lot of people know him, 90 million people know him, but he's about 20 million.
How old is he?
He's young.
How
Yeah.
old?
Probably 30.
So
Yeah.
how many 30-year-olds do you know that could make $30 million by posting shit on YouTube?
True.
It's fantastically amazing. Was The Rock worth 30 million when he was 25?
True. You're right. But I'm just saying, like, I think from this perspective, I think the owners of Google are making more money thanks to him,
Yeah.
right? Because he's building a platform there, right? Every video he puts up, he's building out Google, YouTube. But this is just my observation, right? The Rock's at 280 million, Robert F. Smith's at this, and then some like the guys that I've just never heard of are worth like a lot of money.
Absolutely.
So and what they have in common is that they're doing either private equity, right? Big time hedge fund stuff, trading, investing, or a venture capitalist. That's typically what I'm starting to see. I haven't quite fully can most confidently confirm that yet, but I strongly feel that this game is just a lot more easier to make money than any other gig out there.
Well, you know,
Right.
take the Saratoga newspaper that you get, and you look at the real estate section of transactions completed. The
Yeah.
number of houses that sold in the last 30 days that were between 5 and 20 million is
Yeah.
astronomically high.
Yeah.
I mean, it's like, so there's a lot of money out there. If
There is.
someone's going to buy a $10 million house,
Yeah.
it's just showing there's fantastic wealth in this area. I mean,
Yeah.
staggeringly high.
Yeah, so just think about what we talked about just now, like the ways to make money out there, right? I still question the YouTube part. YouTube, you might have more influence in terms of getting people to do things, right? Because if you could distribute information to 90 million people, you could pretty much get about 1 million people to do almost anything you want. Not anything, but like just, hey, buy this, or hey, do this trend, hey, hashtag this, or whatever, right? Let's jump back to this and then get to the technological part, because that's
They're
the
actually trying to take Saudi Aramco
public, yeah.
with
So
a
that'd be the biggest one.
$2 trillion valuation.
Yeah. Looking, 2 trillion, wow. Looking over at the international markets, okay, guys? Again, I encourage everyone to review this every week. Again, we had a sharp decline in Japan, and now we see a bounce right here. Nothing much. Euro Stocks 50, Europe, a bounce right here. Again, nothing much. DAX, also a bounce. Again, get used to watching all that. This one down here is emerging markets. And emerging markets, we had a sharp decline this week, or last week, and then we have a bounce right here. So that's emerging markets. I like to keep a pulse because I want to make a long-term investment in some of these. Dollar, not much action, right? It spiked up 2 weeks ago, pretty high. I thought it was going to go higher, but it retraced back down. So it kind of relieves the stress on the economy. Whenever we have a high dollar, that's pressure on everyone. Great British. Oh, you guys are walking around using the bathroom. Yeah, feel free to get some water and tea. This is FX action this week, so I saw a lot of activity in this currency. Just want to show this. Nothing much. Oil, just bouncing off right there, double bottom. Commodities ETF, just a decline right here. We'll see where it goes. So I'm just breezing through. Gold. So gold this week was phenomenal. I can't ask for more. I am trading around it. I shaved some of my positions recently. So I'm looking to get back in on a retracement. Do you guys want to know the specifics on where I'm looking to get back in?
Yes.
Sure. Okay.
So how do you decide gold or gold miners?
Gold miners.
So you prefer gold miners over
Yeah.
gold GLD?
I look at GLD, or I look at gold to see where gold miners want to go. So I prefer gold miners because it's more leverage, right?
Oh,
So
I
let's
see.
just I guess you could keep it simple as this. Gold gives you 1x, gold miners give you 2x,
I see.
junior miners give you 3x, and then options on any of that could augment that 2x
Makes
and
perfect
3x.
sense.
Yeah, so just think of it as that. So I look at the 1x to see what 2x and 3x wants to do.
Can we look at Barrick over the last cycle in gold?
So you want the bigger one, right? The last cycle. I don't know if the TD Ameritrade, I gotta go in like trading view to see if I can pull up the numbers. You want the max. So the last cycle in gold, you're talking about like 2013 high, right?
Right, exactly.
So let's see, you're talking about, now remember, it could also be company specific for the reason as to why it didn't go up. They might have been experiencing too much leverage, but go ahead.
I noticed it across a lot of miners.
Across a lot of miners?
A lot of miners dipped like in 2009, even though gold was steadily up.
Mm-hmm. So that relationship, I'm not sure.
Is this the minor or the gold?
This one is, this is a minor.
Minor.
Yeah. Let's look at another one. Let's do AEM. 2013, 8. Yeah, so I'm not sure as to why. Anyone want to take a jab at this? I don't know. You got me on that, but
Yeah, it scared me.
yeah.
Because I thought
Um,
gold going up was a sure bet for miners. But
So my investment thesis today, right? So after 2013, gold has been in a bear market for 6 years. So when you have an industry that's been in a sideways market for 6 years, you're going to clean up your financial profile. So now that gold's finally appreciating, this is where they finally benefit. So I think now the trade makes sense. I don't know what happened to the miners in those years. I got to go back and look.
yeah,
That's
I
the only
wonder
way.
if they're also subject to the greater market. If all the market is tanking, maybe they go down too.
I feel like it could be because I did see. Well, that was only this one day right here, right, when the markets were kind of pulling back. I don't know. We'll see.
In 2013, the gold miners were, they went out there and they sold off their future production. Take a look at what they were doing in their hedging portfolios. That's what destroyed them. So when gold was going up, they didn't take advantage of it at all. Very few did. They were all hedged out. And then they began to lose their hedges in 2014, and of course that's when the gold began to drop.
So I've only started looking at gold probably in 2015, right? I think that was when I started reading those In Gold We Trust report. If it was 2015, I'm trying to recall. But yeah, I think that's an interesting comment you made. Yeah. I want to look into that. So I haven't looked at gold historically that far back.
Okay.
But if you're trying to scare yourself, you're doing a good job. Did I show you guys the gold technicals real quick, or where I'm kind of looking at? So GLD. So this is what I'm looking at. It's very far away from the 20-day moving average and outside the Bollinger Band, so I just decided to shave some. But the following 3-day trading action kind of went sideways. So I wanted to kind of go sideways to de-risk itself, to retrace maybe somewhere near the 20-day moving average or in between here to reposition back in. But that's really what I do. I did regret shaving this position off. I shaved somewhere here, and then the next day it went even higher, right? This one I didn't shave off so much right here, but it didn't go as high. There's AGI, I shaved some off, but then I went back right in, right? So I shaved off the first day and then kind of red. I went back in maybe that Friday, I forget. But I'm still in this one. I still like this one.
It was an exciting week for Ego.
Ego I wasn't really looking at much. I'm more playing the bigger one. So this one I'm playing. This one I added in at the 50-day moving average. This one I started adding in a little bit more. Yeah. So you want to see Ego. So Ego's another gold miner. So Ego's been ripping like crazy. I think one of our members, Chris, he's in position with this one as well. I did add a lot of silver. I would argue my silver positions are getting pretty big, right? So I added this one this week, as well as silver calls. So for this one, yeah, so the silver calls kind of started playing out. The calls I have are 2021, January 2021. You want to see the prices for people who you know, want to look at the options.
Silver has the most potential.
Yeah, so I like silver. So I go all the way out to the 2021 right here, right? How about AU? Just 1 second, Lily. So 2021, I have strikes. I think they're in the money at the moment. Let me see where the price is at. So I have 15 strikes as well as, I have like, let me see, 15. So I think I have 14, 15, 17. So I'm laddering kind of. But they're so cheap, in my opinion. It's $200 a contract for 2021 expiration. So look, someone is asking to sell for $203. That's for one contract. This is like awesome. So I could really size up on this. So those are the contracts that I'm buying and just kind of holding it for a longer term. If I get too excited with like a big move, then I'll take some, but I want to go back and buy those contracts. Let's see what else. So that's my take on metals right now in terms of position wise. Some sectors I'm looking at just to kind of see if there's anything bad going on. Transports, this is what IYT looks like. 200-day moving average acting as resistance. Semiconductors, double top. Again, I'm bearish on semiconductors. The investment thesis is that global revenues are in decline. I did forget one. Lily asked to look at AU real quick. So Ashanti. So analysis on this. Did you any specifics you want me to look at this, or like the fundamentals, or what I think about this company? So this is South Africa. I don't play the South Africa jurisdiction. I mean, I prefer the Canada and USA. So I haven't looked at this one, but it looks like the markets really want this. And if you want to look at what money managers are holding on to AU, because that might reinforce your confidence in holding the position. So let's take a look. Let's see who is holding AU. But this is coming off of a low. The weekly chart looks really good, and the daily chart looks good as well, in my opinion. The fundamentals, it's not as, you know, something like an Ego where it's trading at below book value, which is more of a nice defensive play. But just 1 second, this is loading. Okay, okay, there we go. So let's see who's holding this position. Go down. John Paulson. Wow. So John's a smart guy. Howard Marks likes it. Okay, if Howard Marks likes it, and he's a value investor. So this one looks pretty good. Lewis Moore Bacon, Ray Dalio, First Eagle, Jim Simons, and so forth. The biggest one would be the 3% holder right here, John Paulson. So let's look at his portfolio and see what other gold position he has. Let's see, so current portfolio. So for those of you who are new, is this kind of exciting for you? Or is it like,
Yeah. For me, it really is.
Yeah, because this guy's managing $4.59 billion, right? And his biggest position is GLD. So this is like probably what Bernard's portfolio looks like. Maybe, I don't know. So I like to do it by shares. If not, then let's see. Is AU? Yeah, AU is like his top 1, 2, 3, 4, 5. His top 6 holding in terms of shares. This looks pretty good. So yeah, you may have a winner right there. I'm not looking at this one. There's so many gold miners. I mean, you could filter them out and just see which one you want, right? But I'm mainly doing calls on like the bigger ones. So like NEM, Gold, AEM, KL. Those are the ones I'm paying attention to more. And then I have some down here, AGI, Ego, and so forth. Yeah, where's AU? AU's up here. Actually, where is AU? Oh, there it is. Yeah, AU is pretty solid, but South Africa. Okay. And then if you want to see valuations, you know, look for the ones that below book value. AUI is below book value, right? And then IAG, AGI, those are the 2 nice ones as well. Okay. All right. Real quick. So XLF financials above 200-day moving average. GDX Gold miners looking good, spiking up again, using it as a proxy to see where gold miners want to go. IGV software sector, software is kind of having a little bit of headwind at the 50-day moving average, and that is pretty much it for the global analysis.
Can you look up FCX? It's copper.
Do you want to trade copper, or
That's what I've been trading.
because I want to get into the next part here.
FCX.
This is like the true lecture here. So what are you seeing with FCX? FCX is Basic Materials, Copper, Freeport, and they are 14 billion market cap. Now, are you long or short, or what's your thinking?
I go both ways. I mean, all day long.
Okay, so what's your
But
then the
I'm
question is
90% short,
what's your
90%
time frame?
short.
90% short. I would agree with you right there. From a daily perspective, this chart looks like it wants to break down. If it breaks down below 975, I think it could go a lot lower, right? Let's say 975, 950. This is looking very bearish. You would also want to look at copper prices. From a weekly, it's very bearish. From a monthly, it's pretty bearish as well. Those are my comments on the technicals.
Well, no, I knew about it. Just
Yeah.
yeah.
Okay, all right, let's switch gears here, okay, guys? We went through the markets. Now I want to jump into just kind of analyzing Ashim, if you guys want to do that, or you want to stay with stocks. So Ashim Chandra, I keep saying Chandra, Chandna. How do I correctly pronounce it? Chandna. Okay. So post meeting analysis. So Darsh wanted me to just kind of give you guys my take on, how do I feel about meeting him, the questions I ask, and
What
so
did you
forth.
ask him?
Well, I wrote it down right here, and so we'll review it. But you guys want to do like a little bit intro, look at his LinkedIn, and see who he is? Okay, so give you guys, for the people who don't know, so he's one of my favorite VCs. I don't really talk about him in this club, but I have been watching him for quite a while, mainly because every software company that I look up to, Greylock seems to be the one to hold a position. And the funny part as well is I tried to add this guy probably on LinkedIn probably like 3 years ago, and he never accepted it. Until yesterday.
I was gonna say, try it again.
Yeah, see, so that's the story of you got to keep trying and you got to go the distance, right? So I guess I didn't stop trying, but it's really thanks to Bonnie over here to kind of spark the relationship with this guy again. Say again? Grease the wheels, sure. Okay.
So you know.
So a little profile about him. He does a pretty good job of just going all the way, back with his work experience. So there's this chart right here that I downloaded, but today it's like really. Oh wait, you can't really see it. So if you open it up, you can't really see it, right? And over here it's kind of blurry. So I have the original one, which is like in higher quality that he used to keep up. But this is basically my inspiration behind being a venture capitalist. When I see that a VC fund like this has such an organized portfolio of different segments in the enterprise software world, right? And all these companies to me have extremely great upside. It's just right now I'm really scared of the global macro conditions and have positioned myself into value stocks and gold. But if I was my normal self in a strong environment, I'd be playing this all day long, right? Palo Alto Networks calls on that. Okta, Imperva got bought out by Thoma Bravo. Sky High, I don't know. Obsidian, I hear, is pretty interesting. Pure Storage, I used to work at. I like this company as well. Rubrik, in talking with Ashim on yesterday, he seems to be the most bullish on this company that he's invested in right now. Arista Network, this is like a historical favorite. Current technicals right now are just going sideways. Docker, I hear, is just like a legendary enterprise software company.
He said storage is a good place.
I asked him like which segment in enterprise software. He didn't give specifics because he kind of likes them all, right? And I also asked him about his public market investing habits. He also plays shares. He doesn't play options. He doesn't like options, which is kind of funny. I'm like, you don't like options, but venture capital is basically options, right? Oh, but I get it. You get to it's more hands-on type of options.
Use options to hedge. They don't use options to actually in their account.
Well, hedge funds so hedge funds, remember, are leveraged funds.
Right.
Venture capital is more, I don't know if they lever up, but I guess they could, but they're more, we invest and then we're hands-on, hold your hand to the next level.
Right.
Right.
And then they use options to for insurance, like
Yeah, yeah. So Workday, Dropbox, Sumo Logic got 100 million plus funding from Battery Ventures, which I also respect. Battery Ventures The VCs there are like Midas, Touch, Number, top 10. So again, these guys are funding like, I mean, most of these companies are here, if you know. Right? So if you know like Workday and Pleasanton real estate's going to go up, essentially. So I'm surprised Coupa Software's not in here. Cloudera. Cloudera is becoming, yeah, so I've been adding to Cloudera. I'm getting pretty serious on Cloudera.
Well, icons in it, right? When is the earnings?
Earnings are already passed, if I recall. But I already have a set of options on Cloudera. They're leaps that are against me, but now I just reposition in more. So excited for that one. So let's look at his profile. You know, see who he is. So you guys know he's a VC from Greylock. Greylock is truly top tier in venture capital. I never thought I would meet one of these guys in person. In person at the guy's house. His house was in Atherton, pretty fancy. But yeah, I asked him like, you know, how did you get into venture capital? And he said, and this is where I'm kind of going over some of the questions I asked. Okay, he said, you know, he basically worked in corporate tech, you know, for many years. I think he worked in maybe, Checkpoint. He worked for like several decades. And, you know, one of the companies he worked at, the stock options he was granted paid off. And then from there, it just got him to the next one. And next thing you know, he's writing checks and angel investing, right? It starts with angel investing. As an individual, you would start with angel investing. And then as your hit rate goes up, which he has a very strong hit rate, that's why I really respect him. But I respect Greylock as a whole. And he seems to be like a very long-time member at Greylock. So yeah, angel invest, hit rate goes up, and next thing you know, he joined Greylock, and now there for 16 years.
I thought he said there that he was a founder.
Yeah, I mean, founding
Founding
investor,
investor,
right?
yeah.
So he has several positions. These are his stock positions, but they're all private.
Wow.
Yeah. So Palo Alto Networks, Sumo Logic. So this is where I keep an. So the other thing that he told me, right, that it showed. I wouldn't say it was. It didn't show weakness, but to me it showed VCs could be wrong too. Was that he said like, you know, we invest in these companies, right? But when IPO or liquidity event comes, we get a little emotional and we would sell out. A lot of the guys in the office will sell out of their position, and you know, like LinkedIn to Microsoft, right, or whatever. And then several years later, the stock would go up, and they're just like kicking themselves. So that tells me that they're not great traders, but they're great private equity. Venture capital company building type of investors, right? So they're not public savvy. In here, we're public savvy. At least I think I'm public savvy. Unless you guys don't think I'm public savvy.
They also have lockout
Huh?
thing, right?
Yeah, I mean, but you can still sell after, right? I'm just saying they look long term.
Right.
So it's very interesting to see how when a VC invests into a company and they exit the company and the company kind of just goes on its own with a different set of owners. You guys ever think about that? How an entity evolves? It evolves into like a different set of owners.
But even different directors. I mean, look at Apple.
Yeah.
When they had not Andy Gibb, what's his name?
Yeah, like you know, Steve Jobs left Apple
Yeah.
and it ran on its own, and then he came back
Yeah.
and then renovated
But,
Apple.
John Scully,
Right.
I knew personally, and then the other guy, I can't remember his name, like Andy Gibb, it's something like that.
Yeah,
I did his tree work also,
yeah,
and they took the company different directions.
yeah.
And the stockholders and the board got to see it was not going anywhere, so that's why Steve got to come back.
Right. So that was his LinkedIn, guys. This is his actual website profile. You want his phone number? If you got an idea, I guess you could reach out. But these are his companies that he's currently in position. So Palo Alto Networks. I think when I pulled up the shares, I saw his name in there, if I recall. He might have been a big holder in this one. And then these are his past investments. So Imperva got acquired by Thoma Bravo, AVI Networks by VMware, Sky High Networks, App Dynamics, Arista Networks we like, Aruba Networks is in there, and so forth. So I don't know what his thinking logic is on when they're funding an idea or finding the entrepreneur, but I don't know if I guess what I'm trying to say is that I don't know if he's trying to look for an exit through a corporation or through IPO, right? But that's something I wish I asked.
I mean, it looks like these companies are all over the enterprise software space, especially, you know,
Yeah.
that's actually a hardware.
Yeah, if you look at Greylock's investing habits, you can see down here that they're primarily this is what they invest in right here. Categories and number of investments for by Greylock, software companies, and then the other one is enterprise software. Right now, the trend in venture capital is basically, I think it's enterprise software. At least the enterprise guy thinks so. But
This is his personal investment? I mean, how does it work?
how does it work, right? So let's say, so Greylock was founded in 1965 by a different partner, by a different founder, right? And it's basically they raise funds. Just think of it as an entity. You put the funds into the entity, and then you hire investors. And those investors will go out and just find opportunities to invest in and help build those startups. So I guess it could answer, I'll read the questions right here. So we looked at his profile, we looked at the chat right here. So what was it like talking to Ashim? So I just wrote some of this yesterday after meeting him. Having a real-time conversation allows you to get into the thought process of the person, to hear the changes in their tone, his body language, his confidence, his eye contact, his energy level, etc. Gives me deeper insights, and it reveals something that I think cannot be described over the internet or YouTube, right? You just kind of feel something. Like I was, I don't know if you noticed, but I was trying to I wasn't trying to feel him, but I was really trying to, okay, what kind of guy is this guy?
You want to get to know him.
Yeah, I really wanted to get to know him because I've, for the longest time, for a few years, I've only read about him, right? About his high hit rate.
That's right.
And the reason being is that there are some money managers that I follow on Twitter that I highly respect, and they follow him. And that's how I kind of know, okay, this guy is serious, and he's in Silicon Valley, but never would I have thought to meet him. But when I meet him, it really unlocked a lot of things. I'll tell you that. Okay, meeting Ashim.
More confidence to.
Yes, I feel a lot more.
Following.
I feel a lot more. Well, I feel a lot more confident today to jump into venture capital, and I'll read it right here. Meeting Ashim in person taught me that we're all just human beings at the end of the day, and he simply is just a very hardworking and passionate man. That's really all he is. Because when I asked him, what does it take to be a top VC? He said, these guys at Sequoia, Kleiner Perkins, and all that, they're top VC firms, right? They work 7 days a week, and no one's telling them to work 7 days a week. It's their own desire.
There's a certain intelligence factor there too.
True.
So
true.
if he's investing in the hottest technologies of artificial intelligence and et cetera.
Yeah.
And you sit in front of a board and a bunch of tech people and you evaluate, is this going to happen? If you apply your intelligence from his background and you've got the money to make it happen, even if you hit, 3 out of 10, you're still going to make $1 billion.
Yeah. So let's say if I had two people and they're equivalent in intelligence, but I will put them into different sectors and force them to play only that sector. The one in the technology software sector versus the real estate, the technology will always win, right? Same amount of time, same amount of intelligence. You see what I mean? That's why we were analyzing earlier about the YouTube over here. I'll put you in this environment, the YouTube maker environment, and then I'll put you into celebrity status, and then I'll put you into money manager status. For some darn reason, it just seems that trading, investing makes a lot of money. It seems to be a loophole. And there's a book out there that I used to talk about in technical discussion number 20. It's oh my God. It's a really good book because the guy is a university professor and he went nuts and just did an analysis of all the salaries and all the high earning people in the world, from celebrities to politicians and so forth. And he did some statistical analysis and said at the end of the day, who really makes the most money? It turns out to be hedge fund managers. I have to pull that book up for you guys. Oh man. Okay. So can someone remind me if I forget? I'll bring that book up. It's really interesting. So yeah, meeting him in person it removed a lot of insecurities that I had. I guess. I mean not like bad insecurities, but just ooh, I wonder about this in venture capital and all that, right? But it's just he's just someone that's really hardworking. That's pretty much it. I think the media today, when you see people on TV, our own minds, this is what I've learned, right? And I've seen this in financial markets and also in the media. The media today really does wonders with our imaginations and creativity. I think our own minds are the issue. We glorify things that more than it is. And that explains valuations and stuff, if you truly think about that. So, yeah, interesting stuff. What is his story? Again, he worked in tech many years, got paid out in stock options, started angel investing, then became full-time VC, and then now at Greylock for 16 years. What does it take to be a top VC? Top tier VC firms like his, Sequoia Capital, KPCB, Koza Ventures, all work more than 7 days a week, and these VCs naturally work hard out of their own desires. You have to want it, and that's so true, because nowhere else have I ever been in life where, you know, if you want something, you gotta go make it happen. It just doesn't come to you. You have to raise the probabilities, right? I mean, if we were just to kind of backtest, like, how do I meet Ashim, or just analyze like the process? Well, first I had to meet Bonnie, but I met Bonnie through the investment club. But first I had to start the investment club, and I had to do it for some time by going the distance. I'm looking at you again, going the distance before I could meet Bonnie, and then build a relationship. Okay, there's trust, and then she introduced me to this event, right? But then before all that, I had to make the decision that I wanted to start an investment club. So you get the point. The ups and downs of being a VC. So this is the other insight that I got about being a VC. It's just as tough. It's not. I mean, it looks glamorous, right? But again, that's what we see from the customer side. But behind the scenes, the way he expressed it, his energy level, his tone, is just as tough. And he told some stories about it. It's just as tough as any competitive market. So nothing new to me here, right? Whether you're selling real estate or software, competition's everywhere. He told stories about the Google founders struggling to get the search engine right. And they were at risk of, like, you know, make it or break it or whatever. Staying up past midnight advising startups. He still does it today, right? Competing with fierce competition, etc. What does his weekly schedule look like? I really asked him that. He networks a lot. It's funny, right? You still have to network as a VC, because that's your deal flow. It's a business. But with more of the people in the markets, advising and building portfolio companies. He spends a lot of time, you know, whatever he invests in, like Rubric, he's spending time just developing those businesses. And he also he spends a lot of time qualifying a ton of startups that come to Greylock, proprietary deal flow, since 1965. So because it has a name brand reputation, all these entrepreneurs are just going there asking for funding. Great, you want funding? Let's see what your business model is and how do we qualify you in or out. And then I asked him about public equities or trading stocks. He's active public shareholder with large positions in Facebook and Google. He doesn't feel bearish about the economy.
Yeah,
Did you get that conversation with him too, Bonnie? Did you ask him about the recession, right? Did he feel like there was like a pending recession from his end, from the venture end? Because I didn't get a sense that he was bearish. But he also made a comment that he said he has a lot of shares in Facebook, and Facebook could drop 30%, but he wouldn't feel it because he's so diversified out. So that might be I asked him if he hedges too. He doesn't hedge at all. He doesn't like to hedge. He's a pure play guy.
I did ask him, do you think, because we're coming to the end of the circle, and then the private companies will become cheaper, and he actually said he doesn't think so.
Yeah. See, that's the most challenging part for me, because technology is like so hot, right? It's forever uptrending. That's what I realized about tech. Tech is an industry that's forever uptrending. I think because his portfolio of holdings are really strong. That's what I'm thinking.
Like, what does he think about enterprise software in specific, like from now? Like,
He's all enterprise software, dude. I asked him, like, you interested in consumer internet? No, not at all.
It's not surprising. I mean, you showed your own graph of how enterprise software is just growing astronomically, right?
Yeah.
So it's unlikely that that's just suddenly going to cave in and suddenly tech is no
Yeah,
longer
yeah,
relevant in
yeah.
society anymore.
Exactly.
So that graph is, whether it goes like
So-
this or like this, it's
Yeah.
still going like that.
So today I'm trying my best to play enterprise software, right? So I'm playing like Carbon Black, which is smaller, but not the big ones. I'd love to play Salesforce, but I don't think Salesforce is moving much at the moment.
Did you ask him about specific companies like Carbon Black, Nutanix?
I did. I did ask him specifically.
He's also bullish on Alibaba.
Yeah, we talked about China too. He's bullish on Alibaba because China won't allow any other cloud infrastructure, and Alibaba has like a monopoly. So I think so again, Alibaba is categorized as technology, emerging markets. I'm waiting for the cycle, but then you never know technology as well. That's where the signals get conflicting. I really like Alibaba. It's just
I doubt he has positions in Alibaba. He wouldn't go that far.
So he's extremely bullish on Google and Facebook, Google Cloud. That's what my gut was telling me when I was talking to him. I was gonna say something just now. You asked me what stocks, right? We talked about Cloudera. Cloudera's that's actually their Greylock.
He's in it, so obviously he's on it like bias.
Yeah, so he thinks Cloudera is cheap.
It's kinda obvious.
Yeah, we talked about Cloudera and Carl Icahn, and he thinks Cloudera is cheap. So I was like, all right, I like Cloudera too. Did you have any other questions that I might have asked him
I'm
about?
gonna ask him about Nutanix just straight up.
Yeah, I mean that's more of a Kozla
Because
question.
you know that storage side, he's on pure storage, right? So
Yeah,
at
yeah,
least Greylock is it.
yeah. So let's look at his VC firm real quick, okay, guys? It's not as big as you think in terms of like how much money they're managing, but it's about 3.5 billion, and it's broken into like several different funds, I'm guessing. But the current fund they have is Fund 15, 1 billion into consumer internet and enterprise IT, and then the stages they invest in is seed, Series A, B, and growth. Right, companies that are just growing like crazy. I guess I won't read that. Let's see what else. This one at Wikipedia, it's like other divisions, right? They used to be semiconductors, but I think semiconductors kind of. I didn't ask him about hardware. I should have.
Innovium is a
Is it?
hardware company.
Send
Okay.
him an email.
I could, or a LinkedIn message. But here, this is the size of Greylock. This is Greylock right here, 1 billion, right? This is SoftBank. So you see the discussions that we have in here when we talk about SoftBank taking a position, managing Saudi money or Apple money, taking a position into Uber. Uber has like political risk because it's taking Saudi money. Saudis probably don't want to lose their money. So that's the size of it, right? So the next cool part, if I met Robert F. Smith or Masayoshi-san, that'd be pretty cool. So yeah, I met a guy from that fund. But still, Greylock is it's to me, I've always viewed them as like an all-star hitter. Like whenever I look at the private VCs participating in a stock, if I see Greylock, I just give a bias to the long side.
What does
Yeah.
this mean? Like 5 funds, 6 funds, and there's an
So they'll start a fund, and then that will invest in one project, or not one project, but a portfolio of projects, and then start another fund as they raise the next set of investors. So what I did, the greatest takeaway, I guess, is knowing that these VCs don't know public markets. That was the greatest takeaway for me, because for him to tell me that a lot of the guys in the office regret that they sold their position, not knowing that in 2 to 3 years the stock went up even more, like greater than what they exited out. That's crazy, huh? That was a
And how do you get to invest
that's like
in
a
Greylock?
$1 million insight.
But it's a cyclic thing, right?
Yeah.
Because what they do is, that is the end of their cycle. Because
Yeah.
when it has IPO, they take the money out
Yeah,
and reinvest in, right? Because
Yeah.
they don't want to lock
True,
their
true,
money, right, for
true.
a long period of time.
yeah.
And how do they get investors? Meaning, how do you invest with Greylock? Is it through, there's probably a limit, right?
How do you invest with?
Greylock. Like, how do I?
You gotta be accredited, man. You gotta be
Exactly.
you gotta be rich, man.
Yeah,
That's really the only way. Yeah.
Like you
Like
can pick from the stocks that they
yeah.
are in.
Like-
You can pick their stocks.
Exactly. So that's why I've only been the way you see me analyze, right? I'll analyze the private sector to see, were they participating here and how far upside can this stock go. So I know they're part of Cloudera. So now I'm pretty confident that Cloudera could go a lot higher. Cloudera to me is cheap and a solid in a tough environment. To me, that at that price, it's solid. With Carl Icahn stepping in, I'd probably pile in more into Cloudera.
Yeah, I saw the earnings is on 4th September.
Hmm.
Yeah.
Well, I'm looking long term, so I have like leaps. I have like 2-year leaps on it, if I recall.
Later, I'll show you why you do not ever want to be in any stock when they report earnings, ever.
What did he
Why's
say
that?
about Cloudera?
I
He
can
said
show you
Cloudera is
later.
a very solid product. Very solid product, very solid executive team, if I recall, or investors, either one of those. He likes it as well, and he thinks it's cheap. That's for those of you who are new today. That should be like enough for your day, knowing that a high hitter VC said that this is a good stock, and
Why has it been going down?
it's been going down because I think there's so many stories now. The CEO transition out. Let me see the growth.
What's the name of the stock?
CLDR. So Carl Icahn didn't join until recently, right? And now that I'm learning about the markets, oh, I'm gonna be too. Dang, someone's on the bus or okay, hold on. Oh, sorry. I think that was Sylvia. Yeah, the more I'm learning about the public markets, I have to keep being in both. I love both of them. I can't.
Well, they're good.
I can't just look at private and I can't just look at public, because public gives you global knowledge as well as insights into a lot more people and what they think. But private gives you more advanced technology, right? There's really advanced technology that exists out there that we don't know about it because they're not commercialized. They're actually in the private market still.
So, okay, what's the success rate of private tech companies in the Bay Area in terms of how many go public, make it, versus how many fail?
These guys have an extremely high success rate. I don't know what the quantitative is though.
What do you think, more than 50%?
And just in general, like VCs?
Just like there's lots of garages and small, you see these little companies, right, with
Yeah,
whatever,
yeah,
in the business with 20 employees. So what percent of those in the Bay Area historically make it?
I think the percentage has dropped because easy money has come out, right? So right now there's a lot. So trickle down economics. If the top is printing out a lot of easy money, it's going to go down to the people. It's going to spread into venture. It's going to spread into hedge funds. It's going to spread everywhere. So there's a lot of money trickle down into venture capital, and I think there's a lot of entrepreneurs who are like, hey, these VCs are just throwing money pretty easily. I want to become an entrepreneur. So there's a lot of zombie junk startups out there. So I think the percentage has gone down because of that.
So in my opinion, the gentleman you were just talking about.
But these guys know how to filter. These guys are the long time track record. They're kind of like you. Like, let's say if I kept teaching this club until number 1,000, let's say, right? And the markets are down. I'm still here, right? Like some sort of track record. Versus like someone that just started an investment club and the markets tank, they disappear.
But that's the real genius. The gentleman you were just talking about, you met.
Yeah.
The ability for him to sit in a room with 10 people with their business plan reviewing it to know if there's something there.
Yeah.
That's the intelligence of knowing if a company's going to make it or not. And I think that's what separates a gentleman like him from others that don't have that.
Man, I asked him this question, like, are you, when you're dealing with startups, and he didn't give me a solid answer. When you're dealing with startups, is the issue product or go to market? Meaning, is it developing the product to its best to sell it, or to bring it to the market and sell it and fight competition? And he said, you need both. Yeah, I mean, but I wanted to know which one is he struggling with. I guess he's probably struggling with both, maybe. I don't know.
By the way, if I remember that right, I think he's not that bullish on Uber and Lime because he thinks the business pattern just doesn't.
Yeah, he's not bullish on CrowdStrike too, because they're overvalued. I could see the overvaluation. But anyways, guys, let's jump to the next part. If you want more questions on that, we could go through it. But I want to get through this exciting tech part that I put together. So investment volume, I was going to show you the volume. It's increased over the last several years for them specifically, but this is what it looks like since 1965. And then primarily software and then enterprise software. Anyways, moving on to the next segment. Unless you have a last question on Ashim, or VC stuff. I hope that was interesting. I put that in last minute.
So from your perspective, can you compare VCs or private equity with hedge funds, like Wall Street style hedge funds? What kind of difference do you see between the top guys in VC and top guys in Wall Street?
Sure. The VCs are very casual dress. The private equity guys are the suit and ties. The hedge fund guys are like the
very serious.
Just sitting in their room and very antisocial. Okay, I don't think you were asking that, but in terms of performance, or what were you asking?
Not specifically, but in terms of I guess the lifestyle is part of it, but just what do you think is difference,
Yeah.
between the two?
Yeah. So the difference is the hedge fund guy is purely an investor trader, and all they do is just watch the markets all day and research all day. You don't need to talk to many people. You may talk to some people if you're big enough. You'll talk to other hedge fund managers and talk about trade ideas, right? That's pretty much it. What we do in here is pretty much more hedge fund, like 90% hedge fund. venture capital, or let's say private equity. Private equity is a bunch of guys, let's say, more dressed up, suit and tie, like Robert F. Smith. We have Robert F. Smith over here. So this guy is more private equity, right? They got the suit and tie. They got the private jets. They'll go fly to another corporation talking about, we want to acquire your corporation that's already making billions of dollars a year, right? And we want to acquire because we, as a group, think we could restructure it financially or operationally and add value to it. And so this guy, he doesn't like to do venture. He likes to buy something like a BlackBerry and then restructure BlackBerry and create value. I like his style. It's pretty cool. But venture capital is kind of like going to the cafe example, right? Today you could buy a cafe and restructure it, or you could start a cafe from scratch. Starting from scratch would be venture capital. So these venture capitals, they're more, probably dressed like Silicon Valley, and they'll talk with an entrepreneur from a corporation that has an idea that's disruptive, and they're going to go from 0 to 1, and they'll buy the equity early and just do that. And the day-to-day is just advising portfolio companies. Yeah. So moving on to the exciting part. I hope it was exciting today. I mean, it's been a long week for me. So, any questions or? Okay, all right. So this part was so I'm building up another investment thesis. If you want to know, another stock that I'm really looking at seriously. Because I've been driving up to San Mateo, meeting like these ServiceNow engineers and stuff, because they want to start a startup, right? And I keep on going past this really fancy looking building. It's next to SurveyMonkey, if anyone knows. It's in San Mateo. I think Ed would know, no?
San Mateo?
Next to SurveyMonkey. It's called OpenText.
OpenText?
Yeah, OpenText. So this is a security that I'm looking to, I see a huge opportunity because it declined recently. Now, this is educational purposes only, okay? But it has a solid story behind it. So I'm just studying this one right now. I like the recent decline at the 200-day moving average. If I go to the daily advance, it looks pretty nice at the pink line right here. But if it fails the pink line, then I think it could go lower.
The drop based on earnings, or what happened?
This was based on earnings, and I think the growth was not as expected, not as high as it wanted to be. But it's relatively small at 10 billion. 10 billion's pretty small for the scale of operations they have. So I kind of like it. I started doing deeper research, and then I came across one of their Investor Day presentation, and it was I started talking about how the world keeps changing. So I really like what they said, and I wanted to share with you guys today. So today's the this would probably be the highlight of it, or the VC part. But I'm not sure if you guys are excited about the VC part. Okay, so let's start. So where does wealth come from? This is actually from their investor presentation report. Where does wealth come from? For many thousands of years, people work in the fields and live in poverty. Life was cruel, short, miserable. Life expectancy was 28 in 18th century France. There was no hope, no advancement, no life, liberty, or the pursuit of happiness. Right? So what does that mean? If technology starts advancing, will we live longer? Right? In their slides, they said we would one day live to 200. So we lived at 200. Will we retire at 150? That'd be insane, right? But let's see. Technology will make the world more efficient, save time and help people live longer, give more time at an early age. So I believe this will push people to answer the bigger questions in life sooner than they think. Questions like, what is your purpose, aspiration, passion, etc. I wonder if the majority of human race is ready to answer these big questions. So this is what I actually talked about with Ashim yesterday. I think when you left, it was just like, it was me and this other girl there and him, and we were talking about, for once not investing, but we were just talking about the impact of like technology onto the world. We were talking about efficiencies, and we were saying how, as technology is like advancing, it's removing all the inefficiencies out in the current generation, right? And then, but the legacy trend, the older generations, they spent a lot of time doing all these things with which the newer generation doesn't have to. So what does the newer generation do with all that time when the choices of consumption out there aren't that many? Meaning like, okay, today what are the choices to consume? It's pretty standard, right? Go to the movies, go to the ice cream museum in San Francisco, but pretty standard. But now we're unlocking more time. Where's that time gonna go? It's either gonna go to leisure or work, right? So I have this theory that the younger generation, and I like to study the younger generation, Generation Z. They're gonna talk about Generation Z as well. It's gonna become pretty critical. I wanna know what they're gonna consume next.
I think it will be experience on demand.
experience.
Being able to live virtually any life you want, anytime.
That's ambitious. So we talk about on-demand consumption, right? Which is the on-demand economy like Lyft and Uber. Now we're talking about the on-demand or experience on demand. Like I want to be a warrior and go fight a dragon or something. That's crazy.
Like if you want to be an advisor to Sun Tzu, you're in the art of war.
Oh, hey, okay. Yeah, and so they in this, and again, remember this presentation, they're trying to sell us on investing into open text. So I'm showing you the highlights of it and what I liked about the presentation to see if they sold me, because this is what I enjoy reading these days. So if technology is going to remove all the inefficiencies in the younger people, Generation Z, as I observe them, they're going to have to face the bigger questions in life a lot sooner than Generation X, and Y. So what I have right here is Maslow's hierarchy of needs. Once you get your basic needs out of the way, where do you go next? Your physiological needs, your confidence, your esteem needs, belongings, and love needs. And then finally, you have these self-fulfillment needs, the self-actualization. That's why I actually had a conversation with Ashim yesterday. I think he's big on this. Like he's not working for the money. He's really working because he loves advising startups and helping them out. And that was really nice to know. Yeah, because there's nothing else to do. He lives in a $9.9 million home, and he's got a pretty dog, right? I met his dog too. He's really big on this. Have you guys thought about self-actualization? Anyone in here, or is this you're kind of just putting your head down and still working for the money? Because as the future comes, everything that's labor is going to be automated. So what are you going to do? You have a lot more time to think. And this could breed business opportunity in like the world of like motivational speaking and self-development. I hope you guys didn't come in here for motivation, because it's not motivational. That'd be funny if someone came in here and like, "Okay, this is finance. I came here for the motivational." It's not. This is finance. Okay, it's not to be super exciting. So let's look at the history real quick and see where we came from. Where are we today? Because Industry 4.0 is very real, and Robert F. Smith is a big fan of Industry 4.0, and a lot of his investments is around that framework of his belief that Industry 4.0 is really real. So before we could understand Industry 4.0, we got to understand the rest, right? So let's start with 1.0. 1.0, 1715 to 1840. Machines and locomotive create the wealth of industry, 1.0, which begins to lift society from poverty and misery, thanks to machines. Right, that's 1.0. And then from 1870 to 1969, Industry 2.0, electricity-driven production, advances in electricity and magnets, mass production, including fuel, Bessemer process to create steel, telephone, and automobiles created amazing wealth over 100 years. Right? If you read the history of the greatest capitalist investors ever, they've always invested on some theme, right? So think about this for a second. And where do you think Robert F. Smith is today? I strongly believe Robert F. Smith is probably going to be the Warren Buffett of my time. We have a Warren Buffett of my time already, but the Warren Buffett of Generation Z and beyond. That guy's a heavy hitter. So Industry 3.0, high-tech automated production. The greatest wealth has been created by integrated circuit, computers, satellites, lasers, communications, cloud, and our modern world. Nothing we don't know already, right? And then Industry 4.0, what drives production in the future? Keep reducing the physics down to the molecular level, data, AI, nanotechnology, biotechnology, graphenes, not silicon, the information age. So this is, I hope, to share with you, because we want to develop a view on the world. And the view here is that we're transitioning into Industry 4.0, and we're in the early innings, as almost every investor is saying. So as we move on in this investment club, we want to hold this view, and how do we invest around that? This is the huge secular trend that's happening right now, right? And whenever these Industry 2.0, 3.0, 5.0, whatever, whenever they happen, in my observation, it significantly changes the way of life, the way social infrastructure is, and we gotta pay attention to that, right? So I think a lot of changes are coming, and there are plenty of ways to capitalize, right? I think this whole social influencer thing, no one in the media has really acknowledged it, but it's becoming a very real occupation where one could just stay at home today and just post on every media platform, social media platform, and make money. As weird as it sounds, because when I'm seeing some of my nephews and stuff browsing on like TikTok, anyone use TikTok? Okay, so it's getting pretty advanced, right? So all these other social media platforms, I could see like on the other side, there's like younger people creating content and selling. So remember, the laborious type of jobs are disappearing. It's going to leave just like the human type of jobs, which is kind of like.
Look at how many apps have come out. I mean.
It's not so much apps. This is more like.
Well, no, but I'm saying though that someone's sitting somewhere developing an app, and you know where there used to be a few, now there's thousands of apps for.
There's gonna be a need to consolidate. I feel.
I think
into like into a super app.
And they're going to go back to black and white TV maybe. But no,
so let's get through this part.
Yeah.
So Moore's law, and von Neumann, who surrenders first? So they give you a chart right here. Moore's law is alive and well. Transistors per millimeter by year. It's increasing. Exponential growth will last for another decade. Chips everywhere from engines, toilets, labels. Age of silicon will end. Silicon Valley, the new Rust Belt. Von Neumann yields to quantum and graphene. In a blink of an eye. Oh, never mind. So next slide. In the blink of an eye. So this is actually in the investor pitch report, right? Blink and you are on the internet. Recognize people, translate languages instantly. Monitor diabetes, sugar levels, adjust your eye prescription. So I'm not into graphene. Lolly, I think you might know about graphene a little bit, right? Is that like a viable, is that really the next thing?
It has a lot of promise, okay, and it has shown in some areas a lot of opportunities, but still needs to go.
Yeah.
People have been betting against silicon for decades now. So
Yeah,
it just doesn't work out.
Yeah, there's a chart down here after we finish all this. I'll show you right now. That it's not ready yet. This is the graphene era, right? We're actually in the information era. So we're not there yet.
Right.
But to know that if we're in the information era, what is going to become an asset? Like the asset class is evolving, right? In here, you know me as like the stocks and bonds or whatever guy, right? But now I'm talking about data as an asset class that could be superior to money, and we need to pay attention to this. This is where it's more like the technology and finance side. Let's further look at some of the technologies. 5Gs, gigabytes in a second. You guys already know about this one, but enhanced mobile broadband. So gigabytes in a second. So things like smart homes, voice on the phone, smart cities. I think these are things that most of you already heard about. But 3D video, ultra high definition screens, work and play in the cloud, augmented reality, 3D printing. So again, more data is kind of growing, right? True mass customization, not mass production. To print or to grow. Remember we talked about how, if this, they say that in the future China won't be shipping so much of its scaled up products, but instead they'll be shipping 3D machines to go and print it when they want on demand. So the scary part that we discussed last time was that, well, in that case, countries could ship a printing machines and then print weapons on the spot. Right, so it's also like warfare would also evolve, but just something to think about. Personalized shoes, prosthetics, engines, grow a diamond ear or bladder.
I just finished doing a tree job. I own a tree company in Menlo Park. I just finished, it's right in this, working for the #1 pediatric heart surgeon at Stanford. And he's telling me, he's written all kind of books and he's 67 years old. But he's telling me, because I'm asking about training other people, and he said this is one of the biggest breakthroughs that they've had. He's actually done heart transplants, and they're smaller than, they're little. They're like a walnut on these little kids. They're 4 or 5 days old, 3, 4 years old. And he said what they're doing is 3D printing the child's heart, and they get to slice them and look inside. And that's how he's teaching other people, is because of these molds that he can
Right,
do.
that's right.
That's advanced what you're talking about, the future's coming.
Yeah, so okay, I'm trying to mute this. Okay, so I mean, I like to pay attention to the future or technological advancements because it's opportunities to invest, right? Either as a VC or, other stocks that are publicly traded that might benefit from the wave of revenue. Here's another one, nanomedicine and biotech, all at the cellular level. Chemotherapy delivered on molecules that hone in on cancer cells, attack cancer cell by cell. Ingestible smart pills with cameras, computers, and guidance systems. DNA chip scannings for cancer before a tumor develops.
Great.
Yeah, exciting world. The digitization of medicine and the human body, surgery, radiation and chemotherapy someday will be the analog approach. Even the toilet will extend our lives or even reveal secrets. Waste in the toilet plus biosensors plus DNA scanning chips will detect cancer and extend lives. Robotics set to outpace auto industry. Testing emotional robots in schools and nursing homes. Take over the dirty and dangerous jobs, cleaning up the Fukushima nuclear disaster. Displace 20% of human work, the repetitive tasks. See, I think with the robots and all this, it's really going to push humans to answer the big question. What is your purpose in life? Right? Because I think historically it's been more so of this is your job and people kind of sit there for several long years. But now it's like robots are taking over. So that's releasing time. So this world is going to get more dynamic. We want to pay attention to this. It's already started. There's a robot lawyer. This is why I talked with Sheen yesterday. He talked about like lawyer software or something like that, like legal software. It's trending in his world. Robot reporter, robot chef. So robot reader too, right here. What else? Jobs of the future will be those that robots cannot perform. So disadvantage is repetitive workers or middlemen. But the winners of this will be, I didn't understand this part, but semi-skilled laborers, like carpenters and plumbers, will be the winners. Middlemen who grasp intellectual capitalism. You know what that means? Like the middleman business will go away. Let's say maybe like, they say like a realtor, right? But something like investment banker is a lot more technical, intellectual driven. That one probably won't go away. So that, you're going to have to be more intellectual, it seems. Workers with human skills, so sales, or people who could connect with other human beings. I think for sure as robots come in, you're going to have to be more emotional than ever before, which I've kind of suppressed in this trading investment club. Just kidding. So jobs involving human interactions, lawyer, counselor, intellectual capitalist, analyst, scientist, artist, right? AI can give us better analytics, algorithms, data mining, big data, machine learning. These things are coming. AI will not give us creativity, humanoid robots, human emotions, and personality. So you got to have a personality. Genetics and digital immortality. Live to 120. 4x span over 200 years. Greenland sharks live for 500 years old. Upload DNA sequences and analyze the genes of millions of seniors, and then and then youth. We can find the genes which control cure aging. Or we could transfer a person's personality digitally. So live longer means work longer. How does retirement at the age of 150 sound like? Or I guess in this case it'd be like at the age of 100, right? Yeah. That's something that really, that was so mind-blowing for me when I read it, because if you expand everyone's lifespan, that means you expand their ability to have leisure and produce, or basically to work. So the world would be more dynamic, but then there'll be like so much structural changes that needs to be done, because the 65-year-old retirement model wouldn't work anymore.
Think about it, right?
Yeah.
So every 20, 30 years, the new generation comes in.
Right.
You're supposed to go 2 generations before.
Right.
The third generation comes in. If you have 5 generations of people,
Yeah.
think about the number of people that you're going to have.
Yeah.
Think of the job, right? You're
Yeah.
doing a job which is going to be taken over by robots.
Yeah.
So there won't be jobs for all the people coming in. So probably they'll say, okay, you can't work more than 10 hours a week.
Yeah.
You get paid for working 10 hours a week. That's about it. So you'll have all the leisure time to do what?
I know. It's interesting stuff when you really think about time. I think about time a lot. Biohacking is big. I'm going to skip this real quick because I have the Ray Dalio part as well. Digitization of the human mind, right? Neurohacking computers reading human thoughts, human connectome project, mapping the human brain, printing of memories, cure for mental illness, uploading of memories and experiences, digitization of the human mind. Right? So again, I know, crazy stuff, but it's like new forms of consumption if you think about it. But again, Industry 3.0, the process advantage. Industry 4.0, the information advantage. Physics down to molecular level. So again, just a little recap of what we just looked at. Shift happens, I already showed you this, it's an exciting time. So we're currently right here. So from digital to information era. And I think I'm seeing a lot of investors trying to figure out how to play this space. I just don't know who would be the great thought leaders yet. I mean, I know some, Ashim's one of them, but still have to kind of piece out this space because he's more focused on enterprise. Industry 4.0 is different. At the level of atoms, it is real time, unprecedented planetary scale. What does that mean? 5 billion connected consumers. We're going to be like a hive, a communicating hive, if you think about it. 5 billion connected people, right? We're more connected than ever before in history. So how do we, what business opportunities can come out of that today if we're more connected than ever? That's why you see social media influencers. This is a real occupation that I'm starting to notice, but no one's defining yet. Defining as in like, hey, you could come and become this, right? It's an emerging occupation, just like emerging markets, right? Versus like developed occupations like a real estate agent, let's say. That's already been around for like years. 1 trillion devices or more coming into the market. 50% plus of work will be automated, right? So this is going to be a very data-driven world. What else do I want to read? Business models will be redefined. Sharing, aggregation, subscription, find the inefficiency and get rid of it. If it is inefficient, it will die.
Exactly.
Yep. We are all information companies, commodity capital. They put like a person who's doing like labor. And then information capital, the world's most valuable resources. Google, data and new rules of competition, right? Are we, is there GDPR, which is like increase in regulation of data? So data, we're only starting to regulate it now, right? So this is telling me that it's been like the Wild West and investors are kind of capitalizing on that. There's even a new wave of capital. So this was like from several different slides I read, but this is the updated one. So commodity capital, which is more labor, and then information capital, it's like what you know, and then there's human capital. The more human you could be, right? If there's more machines, then you don't have to be as robotic. You don't have to be as repetitive. You have to be more human. So I could see that the influencer model for the YouTuber, Instagram, or whatever social platform, it's going to continue to happen, and it's a hot market. At least I've seen it in real time. So my interpretation: commodity capital, blue collar, human labor is dying. Information capital, it's about how much you know. It's about data management, and data is greater than money. Is what I'm starting to see. Human capital, your network, how you engage, and your sales ability is what we're talking about when we're talking about human capital. I'll skip this one. Industry 4.0, what drives production in the future? Keep reducing the physics down to the molecular level. So I'm reading this again. New era of enterprise software companies are coming online, at least from their view. A new capital model emerges: information management, security, AI, machine learning. We are all information companies, new wave of technology. So these are the different categories, right? So AI, cloud, 5G, digital. Digital, I don't know what they mean by that. New workforce, machines, experience, new customer success. So this is probably what you're talking about. SAP acquiring Qualtrics for that experience data. That's still I'm still trying to wrap my head around that acquisition and the experience data, but it's very real. Survive in zero trust. Again, this is just part of the pitch to buying open text security, which again, I kind of like. And then this part is actually pretty interesting. The disruption that's going to happen in the stock market. I thought this was relevant, so I pulled it up. So in 2000, the stock market was about 90% human investors and traders. 2006, about 40%, and then 60% algorithms, right? Moving forward to 2020, it looks about 5% humans, and then 95% algorithms. How do you guys feel about that? Scared? I don't feel so scared for some reason. I think I've been hearing it for so long that I don't think it could happen. I think the big players will still be the big players. Yeah. Oh yeah. If you want to take a picture of that, we could read further. So 2% of humans, 2025, it will say zero arbitraging opportunities, which I don't arbitrage, and 0 hedge funds will exist. This part I probably would disagree. I think there will always be a fund out there that will bet on a asymmetric economic opportunity. And then this is the example they gave: 2008 trading floor to 2016 trading floor. So robots are taking over, it seems. Naveed, do you want a chair? We got one right up here next to me if you like. And then the workforce of the future: full human employment. Again, this one we already know: unemployment down, and then jobs created and lost. This is the part about Generation Z right here. 61 million Generation Z enter workforce by 2025. Keep that in mind. Energy of 1,000 suns, they say. A new generation has begun to enter the workforce, and that's called Generation Z. There are 61 million of them, Gen Zers in the US, larger than Generation X, which is probably Sachin's generation, and 2/3 the size of baby boomers. By next year, Gen Z will outnumber millennials, comprising 32% of the global population. Right? Can I ask some of the older people in here, like, what age did you start to realize, like, there were different generations? Was it 30? Was it 40?
50.
That's when you realized?
50.
So you didn't, I mean, when you were 50, you didn't see like the 20-year-olds or the 30-year-olds? You just saw everyone was
Yeah,
like...
they were
Yeah.
like in my group, but at 54, I was still young.
Yeah.
At 56, I said, oh shit, I'm almost 60.
Yeah.
And I remember 60s getting old.
Yeah.
And what's funny is now I'm 72, December I'll be 73, and I'm starting to feel younger.
Yeah.
I'm taking more chances. I'm not so worried. I've been through all kinds of stuff.
Yeah.
I see what you're saying.
Yeah.
I have a whole different philosophy. When I look at how these hedge funds have grown and grown and grown, and the responsibility on them, what I see is a massive depression coming because they're in charge. Their responsibility is so big that when things do turn, and you've all heard the story, a recession is when your neighbor loses his job, a depression is when you lose your job. But what really happens is this, and I've studied this, so I've read it, I didn't invent it. A bear market is when we have 2 quarters with negative GDP. And I'm serious, these charts show it plain as day. Next week is going to be a major, and I'm talking Monday morning, is going to be a major turn because on the Spider and IWM and a couple others, the 20 and the 50 are right here.
So you're predicting a major drop on Monday?
No. It's going to either go up or down. It's going to be next week's going to be a real. The 20 later I'll show you out here, but the 20 and the 50 are kissing.
Is it a golden cross? Is that what it comes? A golden cross?
Yeah. I think that's what it is. But it's either the 20 is either going to go through or it's going to go back. It's going to break down. And I can't tell. I just know that next week's going to be very volatile.
Sure. Let's jump back to stocks real here, and then we'll end the discussion for today. So the last part I have for you guys is really this interview that came out by Ray Dalio this week. I highly recommend the video. It's 30 minutes. It's well worth the time if you're think you watched it already. Yeah, if you're thinking about developing a investment position into what he believes in emerging markets or China as the major opportunity. So going into it, gold and silver as well. Yes.
I've watched about 6 of his.
This is like a fresh release one, so it's pretty interesting. It's on China, right? So he said he believes that there is a changing global order. Hey, no problem. He does not believe that. So you guys understand the concept of a global order, right? World order. World order as a term is used sometimes analytically, sometimes prescriptively. Both usages serve important purposes in grasping the realities of political life on a global level. Analytically, world orders refers to the arrangement of power and authority that provides the framework for the conduct of diplomacy and world politics on a global scale. Prescriptively, world orders refers to the preferred arrangement of power and authority that is associated with the realization of such values as peace, economic growth, and equity, human rights, and environmental quality and sustainability. I'd like to think of it as a global operating system. Right? And the more I think about, if you guys remember last time I said that every 100 years, it's a different set of people on this planet, right? and the ones that come online in the next 100 years, they kind of just adapt with the existing infrastructure. And it's just like, oh, that's what they did. We're going to go and build it forward here. Very, very interesting when I think about that. And so Ray Dalio, he's, I mean, as a hedge fund manager of the biggest hedge fund in the world, he goes and studies 1,000 years of economic prices, which to me is like awesome. So he'll look at every 100 years and see what he found out about it, right? And so in every rise and fall of empires, there's going to be a rise and fall of a reserve currency, meaning the main currency of the world that everyone's kind of operating on. And it's interesting to see that there are other reserve currencies in the world, as our history says. Changing global order. So because of the changing powers of the economics of the world, right? So today, U.S. is pretty strong, but China's kind of rising. So there's just a natural conflict that will occur. So in his opinion, what's going to happen is, yeah, historically there was wars, but from listening to him, he doesn't believe there's going to be a war this time around, a classic war. There will be maybe like a technology war, like an AI war or a trade war, but he doesn't believe there's going to be a classic, life or death type of war. But instead, he also believes that there will be global restructuring of the global order. So we're living in an era today where the U.S. is kind of like consolidating to slightly down in terms of power, and China is like really coming up. And you can see this
India.
Asia in general, right? And it makes sense, and that's why he's really studying this to pile into his position into emerging markets in China. He's bullish on China, and this is what he said about China. He said that China is risky to invest in, but it's even more risky not to invest in. Yeah. So again, he believes that the global restructuring of the global order is beginning. This is due to the rising power in China, which is conflicting with the existing power. Peace and war cycle. So analysis of 1,000 years, right? I'll show you some of the cool charts. And again, guys, I highly recommend you look it up on YouTube. Let me know. I'll show it to you, but it's a really good read. It made me more aware of the rise and decline of the reserve currencies, right? Because I'm looking at the dollar, and I'm seeing it, okay, how long will it go up and down in the next 1 to 10 years to kind of see where the markets want to go? But thinking a little bit bigger about the world, right? What does it mean for a higher dollar, lower dollar? The whole reserve currency stuff. So this is just me kind of geeking out about history, kind of changing up for those of you who don't want to hear me talk about finance all day, right? We talk a lot about stocks and finance. So again, natural conflict arises as time moves forward and national economies trade with each other. So looking at one of the charts that he put out right here, or pictures, relevant case studies. If you go back to the first half of the 16th century, right, the ruling power was France, and the rising power was Habsburgs, and the result was war. And that happened all the way through, right, with every 100, is it 100 years? 16, 17? Yeah. So let's say UK over here, France, war. UK and France, war with Russia. Very fascinating. I never go way back in history like this. Does anyone in here geek out to history?
Absolutely.
As I get older and more into like investing in finance, I'm starting to see that history is becoming a very valuable component of investing. Like hands down, no joke, because it's really defining out the global macro opportunities. And I'm really fascinated about how he approaches this, and it's going to kind of inspire like the next person to go and chase that set of knowledge. So moving up to something that I'm more familiar with, right? So late 19th to early 20th century, Russia and China were the ruling power, and in Japan resulted in war. And in early 20th century, UK, United States, no war. Right? And then over here, everything else, war. Soviet Union, Japan, right? Ruling power, rising power, Japan, no war. So as the most recent, no wars.
How did they come up with that bottom of 1990 till now, UK and France and Germany?
I'm not the...
They're a ruling power? I don't think so. They're both
You tell me.
crappers.
You tell me. I'm
They have a lot of colors and they have a lot of power.
It looks like they're regional rise of power.
Yeah.
I think it's the unification of Germany is what they're specifying there.
I don't know.
Yeah. So in his video, he talked about the 6 measurements of power for an economy, right? And he goes into deep charts of it. It's very fascinating, but it's an eye chart. So the 6 powers are technology, education, and competitiveness. If you read any Economics 101 book, I remember the first time I opened up an economics book and started reading it, and I was just blown away by what it said about, the economies who get ahead are the ones that adopt technology. and knowing the concept of fractal patterns, right? There's patterns in the macro and patterns in the micro. You could take that technology concept, apply it to oneself. That means if the economy applies technology to get ahead, one could apply technology to also get ahead from a micro pattern level, right? So technology, education, and competitiveness is one measurement of power for an economy. It's output, meaning whatever it makes for someone else to consume, whatever you produce. It's trading, probably the volume or the activity, right? Is all the trade going through the Straits of Singapore, like oil? Military, how much is it investing into military? Financial center. Financial centers now, if you view it from a very big global macro perspective, it could be a very strategic play for sovereigns. If you open up a financial center, you attract international money to your financial center, and you really create a booming stock market for your economy. Something that I have to look even higher. And then the reserve status. Every economy had a chance at basically having a reserve currency in the world, but I was just too young or never looked beyond 1,000 years to kind of figure this out. So very, very fascinating. History of empires. So he goes into details and shows you some of the charts right here. This one is a very much an eye chart. I'll try my best to explain it to you, but I just reviewed the six measures of powers out there in terms of an economy, right? And so as you can see, since let's say 1950 for the U.S., the gray right here is all the wars, right? So we're sort of in decline in terms of everything else, but this is our reserve currency. We still remain strong as a reserve currency, right? Now, looking over here in China, right, everything else is kind of going up besides the reserve currency for them. Isn't that interesting? Their trade's going up, their military went up a little bit, and then the output went up. I'm sorry, this was education. This is military, and then education is mixed in with the output over here. So financial center. So this was his thesis. The 6 measures of economic powers are going up in their economy, and so that's why he's betting so hard on emerging markets. Very fascinating stuff. Again, did this make sense? Should I go over again, or I'm gonna go to the next one? I know it's an eye chart. That's why I want to ask. Empire relative strength, right? If you were to kind of consolidate the indicators, if I recall, I watched it earlier in the week. Estimates of relative standing of great empires. This is China's decline right here, as you can see, in the 1800s, and they've been bottoming for a while. It's kind of like a chart, right? So their strength is coming up now, while the U.S. is kind of consolidating and kind of going down. So another eye chart, or another chart that he shared. He believes investing in China is risky, but not investing in China is even more risky. Ray believes China will have the most global trades, highest market cap stock market in the world. That's a very bold statement, right? Considering how small it is today, if he believes it's going to be bigger than the U.S., that's a lot of upside, and we should probably pay attention in the next cycle here. Most advanced technology, etc.
They were number 3, now they're number 2. It's
So-
happening, I think.
So in terms of market cap,
Yeah.
so now let's look at some of their leading technologies, right? They're also number 1 and number 2 in very key areas of leading emerging technologies.
But it
So
might
in
be-
fintech,
Might be GDP. I
What's
think.
fintech mean?
fintech would be like financial, well, I guess it's short for financial technology, but something like how we invest into like Robinhood or anything related to financial software technology or any of that. Yeah.
China's ahead of the United States?
I mean, I guess so, yeah. Yeah. So I remember how we went over the WeChat report, right? And I showed you how a day in the life of the average Chinese
Right,
person,
right.
they use WeChat all the way through for payments, transportation, for chatting, for dating, for everything, right? So they are ahead in
My
fintech.
kid's grandma, my wife's mom, she uses TikTok all day.
That's a Chinese company. Yeah. So they're ahead in fintech, right? AI machine learning, they're number 3. So U.S. is leading in that front. Wearables, they're number 2. Virtual reality, they're number 2. Education technology, they're number 2. Autonomous driving, they're number 2. It's only a matter of time, right? They're catching up with so much momentum. So these are the leading, solid technologies that he believes and where they position. Very interesting stuff. Now, unicorns around the world, from a volume perspective, U.S. has 40% of the volume of unicorns. They have 34%, and then the rest of the world is 19%. Right? So venture capital is hot in these 2 realms, essentially. That's why you have Sequoia Capital China, of China. Share of global, if you actually look at the 2019 Midas list of top tech investors, the number one is from Sequoia Capital China. It's a Chinese gentleman. Share of unicorn value, 43% of the value, almost equivalent to the US. So they have just as much as valuable unicorns as over here almost, just 2% off. And then domestic capital markets, right? Total A share market cap. A share is the more higher, like blue chips of the Chinese stock market. This is what it looks like. And then government bonds and stuff like that. So it's been increasing in size since 2008. And then over for foreign holders, so people in like, let's say Europe or Japan or USA, how many people are investing into China, position-wise? So those assets are also going up. Meaning someone like me, I'm holding emerging market assets. I'm holding Chinese assets. It's on a trend to the upside since 2008.
But there's a, sorry to interrupt, but
No,
there's
no problem.
a question because so many of the most valuable Chinese companies, tech companies, are actually public in the US, not in the Chinese market.
Where are their headquarters?
They are headquartered in China, but
Right.
all of their, like, they are.
But their ADR, American Depository Receipt, is traded here.
But they're still Chinese companies, right?
Yeah.
Yeah,
It's still a Chinese company.
but
It's still.
they're inaccessible from the Chinese domestic, like, stock market.
When you say most, I mean 10 cents not here. It's just Alibaba if you were to count it, right?
Neo is that way. I know a Chinese guy who
Yeah.
started
Because
American.
access to money, access to people, right? So once China goes up, it won't take long to turn back.
Okay.
Well, let's continue along and we could discuss after because people are getting tired in here maybe. GDP. So USA, let's say 2020 right here. This is where we're at, right? They're already surpassing us in terms of GDP. So output, more productive.
PPP adjusted,
PPP adjusted. Price purchasing power.
purchasing power, so it's not actually.
It's not the actual number, the actual nominal number.
Yes. Sorry, I'm computing in my head. Share of global exports.
Basically, look at it this way: China has 3 times as much population as the US. So at the time that it crossed over,
Mhm.
so the US had 3 times the GDP, actual GDP than China.
Per person.
Per person right now, when it is per person was equal, the actual.
No, it's not per person, right? It's adjusted for the price, domestic price.
Build a basket of comparable goods, services, look at prices, and purchasing power okay, purchasing power parity.
Purchasing power parity.
Yeah.
The nominal number in US is still much higher.
Okay, we'll circle back. Share of global exports. So exports on their end is up. Share of global output. I mean, that to me is like GDP, but no. Share of global equity market cap. So expected to go up. So this is where I like this chart right here. This is telling me that China has some upside in terms of investments. And then share of global debt securities. Also trending up. This one's trending down. I would say that probably because the USA is kind of over leveraged and then is in decline. Right? How much more debt can you issue to USA companies when it's fully loaded versus ones that are kind of emerging that could use debt? Very good analysis. And then I wanted to finish off by looking at his portfolio, which we did already. And that's pretty much it for today. Yeah, I hope today's presentation wasn't too dry. It was a long week for me today. You know, I think I met maybe, let's see, after today, there's 35, 40 people, I don't know, in the room. I probably met 150 to 200 people this week.
That's great.
So, yeah, it was a long week for me. But we did it. All right. We can still stick around and talk about stocks. I know you guys want to come here for stocks. I do have some stocks. If you want me to go over the open text analysis, I'm open to doing that as well. You like that security? I mean,
Yes.
I'm just letting people know, like, you're welcome to step out or go, because I know, like, people in the front, they might be shy to leave. Yeah, if you got to go, feel free to go. We'll go over some stocks, and that's pretty much it. Real quick, Carbon Black this week. They're looking to sell. So that's a good thing for us. I like this breakout right here. I'm still in position. I was pretty happy to see that spike. Some quick money. But I didn't take the money, so I think it could go a little bit higher with the news. Square. I'm bringing up Square because some people ask me about the position. Some people have position there. So I see a gap down right here. is looking a little negative. Prior to earnings, Square actually looked pretty bullish, but now it's kind of probably going to go sideways for some time, or maybe lower. That's the issue with the gap down in high volume right here. It's a solid company. I forget, it was either Bill Gurley or Mary Meeker. I think it was Mary Meeker who holds a position in Square. And so I like Square, but it's more of a longer term play. Growth-wise, they're focused on small business mainly. Not bad, but I'm not too excited as I am for like Carpet Black compared to Square. Twitter's looking good. It's setting up a little bit higher here. We had a little pullback, but it's still held, so I like this position again. Yelp. So someone asked me about Yelp. The recent earnings at Gap Up. Yelp has been a very sideways action for some time. I like Yelp because, again, when I use the Apple Maps, I see that they're integrated with Yelp. And that to me is like, they're supporting the ecosystem. So for Yelp not to exist, you know, it's kind of questionable. I don't know. This is the long-term Yelp chart right here, the monthly. It's stuck in the sideways channel, I'd say, or range bound. So yeah, just wait. There's no clear direction, is what I'm trying to say. Looking over at ENPH. So this is just a follow-up. This one, I think, well, she's not here today, but it pulled back to the open right here, and then went higher. See? It works. It works if you follow the technique. And then Agnico Eagle, one of my favorites. This one is just, yeah, gold miner, climbing higher. Pass, silver, also higher. AMD. AMD is starting to look good. It seems like they might have a growth story. I haven't been a big fan of AMD in the past, but it's looking pretty good. It's respecting the 50-day moving average. See? So this one I would have to kind of ignore, but say it respected the 100-day and gapped up significantly on high volume right here, and now higher. So it wanted to make a new high, but it failed. So I want to see it go above, you know, make some new highs. New highs are always good for stocks to keep going higher. And then Match. Match is another interesting one. They had earnings, came out, so gapped up, retraced. This is very similar to, if I go up, it's very similar to ENPH, right? It gapped up like this, and then retraced to the open right there, as you can see, and then bounced and went higher, right? So we go down to Match again. You see that it opened up high, and then retraced right at the bottom. It looks like it wants to hold. So we'll see if it consolidates sideways, and then go a little bit higher. That's what I'm seeing for Match. If you want to do some calls on that. This one's a beast. The Trade Desk, so they're trying to do a marketing advertisement platform for agencies and corporations. So I like their product model, and they seem to be winning in the market. So this one looks pretty good, still respecting the 100-day moving average, right? So if you're like a 100-day trader or investor, it's more of a longer-term hold. But for me, when I'm trading, I like to play the green one, the 20-day moving average, to kind of get the quick money. But if, like, you know, I like the company a lot, then I mainly like to watch the 50 and the 100. But the 200 is mainly the trend determination for me. If it's above the 200, then it's an uptrend. If it's below the 200, then it's a downtrend. So I keep it simple like that. And then in between, I use the Bollinger Bands to see if there's any overboughtness or oversoldness in the stock. So those are some of the stocks I wanted to review. And then the last part is open text. So open text to me is starting to look like a very attractive market opportunity. So I tell you guys, I drive up to San Mateo, right? So this is what their office looks like. Pretty fancy. Whenever I see a fancy office like this in Silicon Valley, it tells me like they got money. So they've been in operations for a long time, and I'm still trying to wrap my head around what this software company does. It's pretty complex because they have several solutions. Again, I mean, in here, if you don't want to, I would probably advise to learn how to do software investing, because that's where the world's kind of going. Right? I remember what I said, I have to keep evolving this investment club, because if I don't, it's just going to be another traditional investment club. Stocks, bonds, you know, whatever a textbook says we're going to do. This one is like whatever the environment says, we're going to change, and it's always going to be changing. I think that's why, you know, volatility is a nice name for it. Volatility club. So I like open text for this pullback. This might be an opportunity to get in. If you want me to do the quick technicals on this, I'll show you. Let's see. You guys want to hear this, right? I'm guessing. Yes. Okay. So if you guys remember, why real quick, why do I look at the building? I used to work at Morgan Stanley, and the guy who did really well, he was an older gentleman. He would just bike around, and whenever he sees a nice building, he would invest in that. And so his portfolio did really well just by observing the building. So I'm observing the building as well as now jumping into the technicals. So on the daily, this is what I see for the technicals. I do not like this 50-day breakdown right here. I think for a very solid time, it was really holding this uptrend, right? But now that uptrend is broken. So that uptrend is broken. I understand that it needs a breather room, that people want to exit. There's going to be some scared hands, so be relaxed, let them get out, but find out where the security wants to bottom to maybe position into a starter. So if you ask me if I get into a starter, I'll do like, I don't know, 5 to 10 option contracts starter, right? At 38 strikes or 37 strikes in the money, and kind of see if it holds out. If it starts to break down lower, then I might want to get out. So this is a nice fixed risk right here. So this is your risk, and then this is the potential reward, let's say, if it were to retrace. So that's the daily technicals. Let's zoom out and look at the bigger technicals. We'll go over, and we'll also see who are the holders of it. So this is OTEX right here. We'll zoom out into the weekly. So this is the weekly right here. What do we see on the weekly? Anyone in here feel confident in identifying patterns yet, or do you still need me to show you some of these patterns? Because I can help you there as well. So this is a engulfing bear pattern. Yes, for sure. So what he's talking about is, let's say this whole thing right here is a candle. This just got engulfed, right? So for sure, that's very bearish. So that's why we have to really time the way to get in. So what I'm looking at right now is definitely this will act as resistance. 40 will be resistance for this one. But also right now it seems that 38 is solid support, right? But we don't have enough volume right here. So what I'm seeing is like, okay, maybe I might want to buy within this range right here. An opportunity to buy, maybe. But if it goes lower, then the next part is 36. So I would like a price anywhere from 38 to 36. All right, let's zoom out to the monthly and see what I see. So monthly wise, this is in a super uptrend, long term, and it's only 10 billion in market cap. Solid company. Again, if it breaks 36, then I think $30 is an absolute must to consider, just to consider, right? But 40 is definitely broken. So I think if you ask me where I think it might go next,
35.
huh?
35.
It might go to 35. It might go something like this. That's what my thinking is telling me. That's like scenario 1. Scenario 2 would probably be go up, hit its head on the 40, test the 40, and go higher, retrace. That's scenario 2. And then the worst scenario would be break of the 35 right here, and then go lower to 30. Well, I think lowest, based off of these valuations, probably 30 would be, it'd be very hard to get below 35. Yeah, I think it'd be very hard to get below 35 and very hard to get below 30. Because this thing is just naturally uptrending, and they have solid partnerships with SAP, Microsoft, and, not Microsoft, SAP and Google. So I like that. They just recently partnered with Google Cloud. So that's the technicals. Any questions on that for OTEX? We can look at some of the fundamentals of what they do. I won't go into this part, but this is basically their software, right? They are a high margin business, 67%. That's really good. They're also profitable. That's why I like them. The only thing that's not causing the stock to go up like crazy is the growth. So that's the only missing part. And you can see there's no growth because the distance between these two, or the sales, is not really there. Price to sales is 3 times. Price to book is 2 times. So everything on his balance sheet is trading about 2.6. That's relatively cheap. Price to earning is kind of high, but that's probably okay for a software company. Software companies tend to trade at a premium. So yeah, I like this pullback for a potential try. Might be a decent trade as well. But I would keep an eye on this for a long-term solid play. Because long-term, if you ask me 5 years out, I think this could easily go to $100. Because of the market opportunity it's addressing. Let's jump into it if you guys want to see that. So it's, oh yeah, I forgot to mention this. It's an absolute leader in the marketplace. So according to a Gartner report, it's all the way up here in the leader space, and these are the competitors. OpenText is here according to Forrester, and then IDC MarketScape, also in the leader segment. So it's a solid software with a solid building, with recently damaged charts. Margins are good. This is the recent announcement right here. So SAP only in May, new open text content management services to be delivered through SAP cloud platform, so that they're a customer. Google has selected OpenText as the preferred partner for enterprise information management system services. And Ashim says that he's extremely bullish on Google Cloud. So this is solid income for OpenText. And I mean, preferred partner, right? Not bad. And then also MasterCard. Yeah, you guys want to jump into the last part right here. Was today's session too dry, or was it interesting? Were you guys okay? We kind of went like a little broad. Yeah. Okay. Let's see. So this is me reading the financial report, but I want to look at this one first. Investor presentations. So for those of you who want to get into deeper, right? Practice going onto the IR website or the investor relations simply by Googling it, and then you read about the company. So it is the enterprise information management leader. The information company, large and growing addressable market, we know that. Number one in content services and business network. Total growth strategy drives market share gains. Powerful cash flow engine, it is profitable, which I like for a software company. Track record of superior shareholder returns. You know what? I do want to show you who are the hedge fund managers holding this before we forget that. So let's pull it up. Open text. And then see if there's any world-class names that we like. We'll do this one and this one. Okay, let's see. Yeah, Ray Dalio's in it, but we want to see shares of outstanding. So Richard Snow is probably the biggest holder right here. And then I want to check out his portfolio and see what his style looks like. We could also upgrade it to plus over here and then see who has a significant position. So the biggest position holder is this person right here, which is 2% of their assets managed. So Blue Harbor Group would be the most aggressive one because it's 20% of their portfolio. Let's look at that one as well. So yeah, this guy's a 5% player, meaning he would probably just take, okay, it's 3, 5. Yeah, he's more of a 3.5% investor, 4% investor, meaning he has so much money, or I mean the money he's playing with, he only wants to take at most a 3% position. So if that position goes to 0, you see how like as a money manager, you could really just, I mean, it's nothing, you won't lose 3% if you think about it realistically. So
all his new ads are also more defensive.
These right here, TSN and Bank of America, Apple and all that? Yeah, it seems defensive. So how do you dissect what this money manager is really betting on as the money maker, right? Because when I'm thinking as a money manager, I'm going to carry a lot of positions, but I'm going to have those few handful of positions that's going to make me a lot of money. And typically for me, it's the share size. It's really the share size where I feel confident that it's their money maker. So when we pull up the share size, it looks like OpenText is only 1 million. His most highest conviction is probably FNB. So financials, okay. And then the other one over here that's holding, or the ownership of OpenText, we don't have. This other one right here has a 20% position in OpenText. So what's the style of this investor? They're managing 1.71 billion, and they got 20% of the portfolio into OpenText. So that should be the most shares. It is 27 million. Oh no, it's not 8. So 9 million shares. Their most bullish one is ISPC, which I don't know what that is, but that's how I study it. So going back to this, again, Gartner leader or market leader. This is their platform. It gets pretty complex. I won't go over it. I know you guys are tired. The goal is not really to talk until you guys leave, but hey, nice seeing you again, Michelle. Let me ask you guys, do you have any questions about this one? Or I don't want to go too long on the analysis to bore everyone, but it's becoming a security I like. I like the recent pullback as an opportunity. And if the markets are okay, I want to play this. But yeah, strong partnership. Let's see what else. These are the other buildings they have. Yeah, and that's pretty much it. Let's call it there, guys. 2 hours, 30 minutes. Thank you.
Thank you.
Yeah, thank you guys. Another long session. There's another one going outside, so feel free to join his. Man, it's a long week.